if you've been through this, it might be just kind of revaluing and hearing same info over and over that you might pick something up. And then we'll cover some other concepts as well, see if we can help some of you guys. And for a lot of you guys, it seems like the psychology of trading is a bigger issue now that you got the technical side, more so than just anything else you're experiencing. So let's go ahead and start. So as you guys know, I put this together to help you guys understand, the movement of the stocks from the market auction theory all the way to volume profile, and then we're adding on to the psychology slides. At the same time, I'm not going to name anyone who's working on it, but we have a few people working on a guide that's potentially going to be over 200 slides or pages in a PDF format, from psychology to trading to explaining all the indicators that we have. So it would be an all-inclusive guide, including these PowerPoint slides as well. So we're still working on it. Let's see how far we can get it and kind of publish it before the year end. So market auction theory. So as you guys know, most of you know, everything moves due to the auction theory, right? You have the buyers and sellers. When they're happy and they're buying within the range, it's called balance, right? Meaning, as long as we can trade here and exchange shares and balance, we're happy and we'll trade, responsive sellers, responsive buyers on the bottom. And that cycle keeps going until one side extreme breaks, either the top or the bottom. When the top breaks, then you're looking for acceptances. On the upper side, you're looking to go bullish. When the bottom breaks, you're looking for the rejections or acceptances below it to go bearish, right? And there's different variations of it, but it's always about the acceptance and the rejection of the new area that they're trying to explore. It's kind of like a price discovery. They're trying to go above. You have to make sure that it's going to be accepted before you hop in. And a lot of momentum traders, that's how they lose money, is that we jump in a new zone, and it could be just a liquidity grab, and they grab the liquidity and then they go down, and that momentum trader, he's stuck holding as the price goes down, and he keeps adding on to his position, even though it's counterintuitive at this point. So if you guys look at this chart on the left, you have the buyers, sellers. We're trading efficiently, meaning balance. Then sometimes you have news, right? Whether it's FMOC or specific company news that come in, and it causes a disagreement, right? One side, and you just need 51% of the one side to be more aggressive than the other side, and you get an imbalance. And they take that new information and they're like, okay, well, this is really bullish for Apple. And there was a couple of instances where Apple announced they're going to be producing phones out of India. And what did you guys see? Well, everybody hopped on a train and said, man, this is bullish, right? We're no longer going to be dependent on China, but set up a supply chain and stuff, right? On a company and size of Apple takes a lot of time. Takes a lot of time, money, and effort. And eventually you see Apple is dipping because the sellers that are longer term holders, they're selling the stock, while the momentum traders and day traders and whatever short term traders, they're buying it because they believe the news is good. And then you get those big orders from the big boys, and they kind of bring it back into the balance and out of balance. And then once we're out of the balance, let's say we go into the imbalance, the stock will naturally look for new values where it's going to be accepted. Whether that's $30 drop, $40 drop, you don't know. You just see, even currently now in ES, we are looking for a new value area. We're trying to find, is the value area, 3,500, is it 2,700, or is it 4,000? But we're in a balance back again. So we're still kind of searching for whether it's the news or whatever that might be to kind of explode it. Does this slide make sense to everyone on the call about the balance, imbalance, market auction theory? And I would just point out that 90% of the time in the stock market, the stock's going to happen to be in balance. And the rare moments that we get the imbalance is the rare moment that a lot of people have FOMO because they missed out a trend day, and then they go shorting on a trend day. Let's say it's bullish trend day, they go shorting every opportunity, while we never found the balance again. So if you want to trade the trend days, then you should not trade much of the balance days, so that way your brain is not focused only on balance type of trading, then you just wait for imbalances and the rejection of those balances and trade that. You can be good at both, balance and imbalance trading. And many people, that say that they're good at both, they're lying. Your brain gets programmed for a lot of balance trading, and then when the imbalance occurs, you will suffer because you will not know how to react. And you're used to shorting the top of the balance because you're in a range. Well, when the imbalance happens, people are looking to short the peaks, and they're like, you can't go higher. Well, don't tell the stock market if it can go higher or lower. It can do whatever it wants because it's unpredictable, right? It's a beast that nobody knows what's going to do next. Okay. Uh,
Yes.
Yes,
this
yes,
is
thank you.
really important that you guys understand the price, time, and volume. When you're, even if you go to a flea market, price is the kind of auction mechanism is used to discover the tool. If the price is considered fair or level, it'll be accepted. If not, you see the rejections. So they use the price to see how do you feel about a stock, right? When you guys look at, some stocks over the past maybe 12 to 16 months. You look at Etsy, you look at, Twilio, you look at a couple of those stocks and you'll see the huge spike. I mean, I'm talking like $400 or $500 spikes. And I mean, they as quickly as they went up, that's how quickly they came down. Because first of all, they never found any buyers in any value areas where they're accepted. It just kept going up because there was a lot of liquidity by the big boys, and they just kept driving it because most of the time they accumulated maybe not enough, maybe just enough, and then they drove the price higher. So a lot of people, they were impulse buyers, right? And I mean, how many people thought that Square was good company at 150? How many thought PayPal was really good at 180? And they'd be like, okay, well, this is good value here. Well, it never set up the value zone when it was going up. It just flew through everything. So really, there's no value till you come back all the way to the point of accumulation, right? Which we're going to talk about the volume accumulation setup where they accumulated, because that's where they're going to be defending their position and building on the position if the company is still valid, meaning financially and fundamentally, if it's still valid, they're going to go buy it. So when you don't have the price discovery and like rejections and acceptance and it's just going straight up, it's going to come down the same way. So the time, basically use the time for the opportunity, right? The price will spend very little time in those zones that have advantage to one of the two sides, buyers or sellers. And when you think about individual companies, right, Apple does not keep an iPhone sales event for a long periods of time or sometimes never. So if you have an opportunity to get it at a good zone, like for instance, for me, the value on Google at $80, pretty good for me. I find value there, and I've seen the people before found value there as well. So for me, it's a buy, but how long is it going to stay in that price range? Probably not long. If we accumulate enough and we push the price higher, that's great. If they push it lower, then the next value I will re-add the share. So price will not stay at a certain price for a while. So you have to take advantage of those prices, but you have to make sure you're in alignment. And the third piece will keep you in the alignment, right? The activity that's measuring how aggressive and how much activity is happening on that share or equity or index. The higher the quantity traded, the more interest it has, right, at that level. So if you're seeing a level being accumulated on the stock, and then from that area, so if you think about it in terms of balances, if you see a box that it's accumulating there, and then it goes up from that area, well, the best entry you can have is when it comes back to that area, because you're going to be with that group of buyers that caused that spike, and you want to make sure you're defending with them. As those guys that were short selling, they're going to be doing what at the bottom? What do you guys think? I'm just making sure you guys are following. If there was an accumulation and the price went up, what are the short sellers going to do when it comes back to that zone?
Covering?
They're going to be covering, they're going to be buying back, which helps the buyers that were there initially. So that's why usually you get a spike up on the first retest here because you have a combo. You have these guys shorting and they're covering, and then you have these buyers protecting. So you have 2 for 1, and that's what you're looking for. So when you put those together, right, price, time, and this, you get the value, right? So you figure out if the value there is going to be accepted or not, and if the value of that stock or index, whatever you might be trading, is fair, and if they find it fair, it's going to stay there for a little bit till something new happens. Okay. The key concept that a lot of you guys, well, when you came in here, hopefully some of you guys understand, uh, that there's really no more buyers and sellers, right? You guys have to, if you still believe that there's more buyers or sellers at one point, there's really none. And a lot of people, when I talk to them, one-on-ones, they're like, what do you mean? Like, that doesn't make sense. Well, it's not that there's more buyers. For you to buy something, somebody has to sell it. So it's always a net zero game, right? It's basically you sell one, I buy one. But it's the fashion that we exchange this. If I'm screaming, give me buy, I'll buy it at any price. Versus, okay, man, I'll just buy it from you, no big deal. There's a difference in the tone and how aggressive the buyers or sellers are. That's what makes the price go up or down. Is the aggressiveness or passive side, right? So if you guys think about the on the aggressive side, the only way you can show aggressiveness in the stock market's how?
Buying.
Okay, that's true. But just buying it doesn't make you aggressive. You can buy and not be aggressive.
The limit orders, correct?
Limit orders are passive orders.
Market orders.
Market order.
Yeah, the market order. So if you guys want to get something in the stock market, if you want to get it right now, how do you get it? You don't get it by limit order. You have to go with the market order because that shows that you want it right now.
Yeah.
So if you're in a limit order, right, that means you're a little bit more passive. So if you guys look at like tape reading and you guys see one level, right? So, some of you guys started looking at book map and stuff. So if you see on the book map, right, there's a lot of orders, let's say 3,700 sitting there. Those are passive orders. That means as the price comes up to this level, there's going to be some sellers unless they move their orders, right? And when they move them, they become ghost orders, right? But if I want to get in the market aggressively, if I want to go buy or short, I can buy market or I can sell market, right? And I do that as well when I trade futures. I can buy market and sell market because I want to get in right there and then, or I could just have a limit order sitting there. And when the price comes there, it's going to be executed as a market order. But until then, I'm in no position till the price reaches a certain level. So that's the difference. What makes the price go up is the aggressiveness of the buyers or sellers at a point, at a certain price point. It's not necessarily that there are more buyers or sellers. And I hate when I hear people, on Twitter or elsewhere, oh man, there's just a lot more buyers and sellers right here. Yeah, that's not possible. It's still zero, So don't fall for that, whether you plan on staying in this Discord. I just hope that you learn the market auction theory and that you'll learn about the aggressiveness and passive side because that's what makes money. It's not really more buyers or sellers. So when you think about this, I just want to give you a visual on how does it look on a tape. So in order for price to move down, the sellers have to kind of buy all the orders available at that level and then continue the price lower, right? So if you guys are looking bottom left here, if this guy's if this guy wants to go lower, well, this seller has to absorb all the orders sitting in 99 in order to move down a ladder going to the 98, right? And these are all passive orders here, and these are all passive sellers here. And if the aggressive buyer wants to go up and move the price to 101, what should they do?
Buy all the orders at 100.
Yeah, you need to buy all these sell orders at 100, which is right now from, the bids and sells, the sellers are a little bit stronger here. And then if you look at these levels, for instance, on the right side here on the tape, you see that the orders right here are massive at, at 105, 106, 107. They're, big walls here. So it's almost like there's a lot imbalance here on the, I'm just giving you a little bit of hints. There's a lot more imbalance on the sell side than there is on the buy side right now. So it'll be in this scenario here, it'll be really difficult for them to drive the price up as the sellers are really stacked on selling here. And then if they want to move it up, right? If these guys want to move the price up, they really have to start absorbing these orders that are sitting at 100, 101, 102, 103 So whether, more limit orders are coming in or more market orders, which would be aggressive, in this case, they will need 25 more market orders just to move it up to 101. And then, they will have continue moving that up and down. But you always look at the imbalances between these, right? If you see a huge imbalance between, and you can look at this on the contract itself, right? And you can look at it on SPY, on ES. I prefer to look at ES tape. You can see if there's ever an imbalance that occurs. So that's something, how do you notice these things and how do you notice imbalances and aggressiveness? You can look at the tape and see that. If you look at the exhaustion on the tape, right? So here, if you see, there's an imbalance on the sell side here. If you look at the first, let's say 5 levels, you see if you were to total them up here real quick, there's probably about 100 orders here. And just in the first 2 levels here, there's a lot more buying here. So I would say this has an opportunity to move really quickly up as we start absorbing, can literally just spike up because there's not much selling until you come into like 105, 106 level. So whenever there's weakness shown on one side, usually we fly through that area. And then now when you compare that to volume profile, what would it look like? What would this area look like on volume profile?
Skinny belly.
It would look like a skinny belly. So when we say, hey, this is a no liquidity zone, this is what happens on the tape. There's not much action there, so we just fly through the area because it's a lack of interest area, meaning we just talked about it. If there's not a lot of quantity traded there, we tend to fly through those areas. Okay. So hopefully you guys can combine the two in your head and visually to start putting the pieces of the puzzle together. So, on Thinkorswim, you do get the level data 2 for free, and they usually show about 10 levels, 5 up, 5 below. If you want to see the levels beyond that level, you have to use level 3 data where you can see the huge order sitting at a certain level or buy order sitting at a certain level. And sometimes you can't trust those orders. As I mentioned, they could be part of an iceberg order. Iceberg order is a huge order that's just broken down into chunks, or it could be somebody ghosting, meaning they show a huge sell, and then as the price arrives at that level, they just withdraw that order. And now a person that wanted to short there is left alone because this guy pulled out. So that's used to trick the people on the tape. Okay?
That's cold.
No, they do it a lot. And then this has been covered before, and most of you should be familiar with these. Market orders, as we mentioned, these are the most aggressive orders because you're gonna get into whatever you're getting, market buy, market sell immediately. Limit, that means the price has to arrive to the level that you're willing to buy, and then a stop order is a passive order is execute a specific price. So when the price reaches it, it becomes a market order and therefore execute at best available price.
Shorty,
Mhm.
I have a question. When you're selling, you want to sell limit order instead of a market order,
That's correct, yeah.
and why?
Well, I want it to, when it reaches certain price, I want it to execute there. If I sell at a market, I will get the best bid ask, right? And I don't know
Okay.
what that might be. If something is not very liquid, like if you're trading an asset that doesn't have a lot of liquidity, they can really mess you up. I got messed up on something called Shop before,
Yeah, I
and I
remember
lost
that.
almost 7K on that trade because they screwed me over. They dropped the floor, and I hit a market order, and they filled me there, and then they drove it back up.
Okay. Okay. Thank you.
Yeah, you want to avoid market unless you're trading ES, something very, very liquid. Uh, there's something called slippage, and that's where they can get you when you trade market orders.
How about on XPX?
I don't recommend it because the bids move very fast on it,
Gotcha.
right? So
Okay.
SPY you can, just because the contracts are not as quick to move as SPX. So I would trade on Apple SPY. I would trade that. I use market orders on ES as well. I prefer to do limit, but if the price misses it by 0.2 points or 2-3 points, I'll do a market order from that level. And then if you're using stop limit, when I'm on the phone, sometimes I'll use a stop limit, meaning let's say I buy an SPX 3800 call at $5 at my stop limit. I want to get out of it. I can put a stop limit somewhere, at 4 and just kind of walk away. So as it comes up to that level, I'll get filled. And these are not the main, from these orders, you can have different variations. You can have the buy and sell, so you can create multiple versions of these, right? Okay. So is everyone comfortable just understanding the function of the market, the theory, the little bit of support of the tape and how to visualize it? Is everybody comfortable so far?
Yep.
I think so.
Okay.
Yeah, I think so. I just a quick question on like understanding the tape or seeing that stuff. Like, where exactly do you go in and see the tape? I guess I've never seen it.
Do you use toss or what do you use?
Um, I I have a trading view.
Okay. TradingView doesn't necessarily have like tape reading. They have like a dome where you can see the orders, but they don't necessarily have like L2 on TradingView. So what do you use to execute orders?
I do the charting on there, and then I just execute them on like I have a Webull and a Robinhood account that I'll execute orders on.
Okay, so Webull, I believe, and I don't trade Webull, somebody will have to confirm. Webull has L2, so you would have to check with somebody in the Discord that uses it. I know Thinkorswim has L2, and I can show that, but I'm not familiar with Webull. I'm pretty certain Robinhood does not have
Can
L2.
you please show that on TOS, Shorty, if you
Yeah,
don't mind?
yeah, we can show it.
Thank you.
Okay. So now, that you have all of this, right? So you have the balances, imbalances, you have the market auction theory, and you have a little bit of tape knowledge, right? And how the price moves between the areas. Volume profile, what it does, instead of showing the bars that are, vertical on the bottom of your screen, it shows you the volume bars that are horizontal. And what that does for us is basically shows us at a certain price level, how much volume did we have. So if we know at a certain point where, let's say you accumulated a lot of volume there, and from that level you exploded lower, you went down, what would that mean? So it was an accumulation that ended up being a distribution. And as the buyers bring back price to that level, that becomes a really good opportunity to short. And in this, guide, we call that a volume accumulation setup, and that can be bullish and bearish, right? And we'll go over those. But that's what volume profile does. It's basically horizontal at what price was the highest volumes. Uh, just like the other one, right? The regular one with the vertical, this one shows volume per day or per whatever time frame you're using. Volume profile is just horizontally, and it kind of teaches us where heaviest activities at what price level they occurred. Okay. So when you think about volume profile, you can't really ignore the bell curve, right? So a lot of times, my value areas are 68%. So that's because of the statistical, one standard deviation, right? So you have 34, 34, which becomes your 68% as a value area. And then the top of the value area in this case would be value area high. If you were to rotate this, and the bottom would be value area low. And that only indicates the extremes of that value area. Means the extreme of that value area on the top was value area high, on the bottom value area low. So it would look like something like this. If this is our value area here, that means 68% of the volume for this period that we are on right now, whether you're using fixed or session volume profile, occurred in here. So whenever you pop outside of these areas, right, either you're going to be accepted like they tried here, or you're going to be rejected, which they brought back inside here, and they rejected it, and you went to the extreme opposite, which is value area low. So you're kind of trading in the range here. You're still happy, not many news in this scenario here. Does everybody understand value area high and low and kind of the POC here? That's red line.
Yes.
Is there anyone that doesn't understand what's value area? It's okay if you don't. I'd rather you say you don't than ask me in chat.
I have a question about it. Is this based on like time frame or is it just like
It can be
is it?
based on whatever you like, right? You can grab, I can grab these 10 candles here using a fixed volume profile. This particular on this chart was using a session volume profile. So it was showing me for the day where the volume area high was and where the value area low is. And then the POC is the red line. So you can change that as you like. You can make it a weekly, you can make it a monthly, and sometimes you'll see on my chart, previous week value area high. I don't put that level just to know where is it, but in my head, I'm able to find previous week value area high and the low, and then I'll know in which area is the previous week balance. And if we're slightly above it and we come back inside, that's telling me, for the week, there's potentially a bear setup to go to the bottom of the previous week value area low. That's the reason why I look for the previous week, 7 days, monthlies, and sometimes if you're in extremes, I look for quarterly balances, right? Does that make sense? So you
Yeah,
can
I
make
think
whatever you want. It just depends what kind of trader you are. If you're a swing trader, I would not suggest that you use, anything less than a week. You can definitely use like monthly volume profiles, even higher time frames based on the trends, right? You would grab some key trends and you would look for them to come back to those POCs and high volume nodes that trigger the buy off or buying or selling. So if you guys think about the value area, just make sure you guys understand the bottom bullet here. A wide value area suggests that there's a large participation of all traders. Everyone's buying and selling the prices they want, while narrow value area is a sign of low activity. So usually when you have a tight area like this, then you can expect a move to be, sudden to break that value area because they're really, really getting compressed in that area, and a slight news can pop that out of that value area. So they're not as happy when wide value areas suggest that they can buy and sell within that area and they're okay with it. Okay, so this is something that you guys should print out, the value area tips and tricks. This should be your morning routine of asking yourself, how did we open? And a lot of you guys that struggle with the bias for the day, meaning are you bullish, are you bearish? This slide should tell you if you're bullish or if you're bearish. And if you just focus on this in the morning and you look at it, you will avoid lying to yourself and playing against the trend. So the first bullet is the one that's been happening the most. If the stock price opens above the value area and then it falls back inside the value area, this is very, very bearish signal, guys. So like if, let's say the previous day, if we open above the value area and then we fall back inside that value area, that's a really, really bearish sign, guys, because that means they were not accepted and it's setting up potentially for 80% rule.
I was just about to say that. Aren't we looking at the 80% rule at the last picture you had on?
Yep, exactly. So that one happens, lately it's been happening a lot just because we've been having a lot of weird reversals. We go up and then all of a sudden you lose it, and just like Friday we dropped down and then we regained it and some, right? So they're testing both extremes, and it's nothing bad because it gives you a range. As a trader, you want the range. You don't want to ignore the range when you're trading. If the stock price opens below the value area, then it rallies back inside the value area of the previous day. This is a strong bullish signal, and we've seen those happen as well. If the stock price opens above below the value area and continues to stay above below, this is an indicator of institutional buying and selling. As a trader, you should expect the price to follow through. So if we're not really revisiting any of those areas, this means that you're most likely having a trend day in the direction that they continued, and you play that till you reach the next level or next value area. Okay.
Got a quick question on this one. The time frame you look, is it like the first 1 hour, which decides the market?
Well, this really doesn't have that 1 hour, right? If we open above the value area at 9:30 and then
Okay.
you fall back at 9:35 inside the value area, I mean, you're already showing bearish signs, right? You're showing bearish signs that you're not able to hold above the value area, and within 5 minutes, you should be looking to see, are we going to continue? Are you going to accept the new value area rejection or not, right? And that's we're going to cover a couple of examples here. So,
Thanks,
you
Shadi.
know, for the sentiment of the day, you can definitely wait, you know, to see the initial balance high set, initial balance low. And that means that you will not be trading the first 30 minutes, right? If you want to be patient and waiting, that's fair as well. And that's usually how long it takes for the news to be absorbed in the market.
Thanks, Shadi.
Okay. So then you have the volume profile, the epochs, right? So don't get this confused with the naked POC. Volume profile is where the highest volume was traded. And usually what I like to do is I look for the setups based on, you know, where the highest volume was traded and it created an imbalance and spiked from there. Usually we will come back to that point, retest it, and that's our point to go long or short on the first retest. After the first retest of that area, it's not highly probable as the first one that you're going to get a reaction in your favor. So
It's
keep that in mind as you're
weaker,
trading.
right?
Yeah, it gets a little weaker, and then, you know, the buyers might not be as aggressive defending those levels. So that's why I say, you know, the first one is usually the best one. So if
Yeah.
you guys remember, it just happened a few days back. You had the, you know, October value area high 3806. That's where we came, and we literally tapped it on the dot, and we dropped about 80 points from there. So those levels, you know, it was a first retest of the area since we dropped, and we came back and they sold off aggressively from that area. If we are above the PD POC, right, just keep this in mind. If you're above previous day POC, that usually will tell you you're a little bit bullish, right? Until you lose that, then you can consider a little bit more bearish sentiment, right? So if you drop inside, if you go above the value area, drop inside, and then you lose the PD POC, now you're really entering the bearish waters because, you know, you have two confirmations. One, you lost the value area, and two, you lost the PD POC. So as you guys can visualize it, hopefully now, the POCs are always going to be your highest volume. And then you might have some high volume nodes above, below, or low volume nodes around it. So those are called skinny bellies or low liquidity zones. Some call it fair value gaps. You can call it whatever you like as long as you understand the concept. So how does it kind of all look together, right? So if you guys put the bell curve here, this is your 68%, the value area high, the value area low, and then, you know, inside the POC is the normal distribution, is basically what you want to be looking for bounces, right? If you're trading in a range, there's different way you trade the value area highs and lows versus when you're in balance, right? They lose a little bit of value from the previous level. Okay, so using the fixed volume profile. So here, if you guys take a look at it, right, you know, you can grab the downtrend here and grab it all the way to here and figure out what's going on. You could also start from here, grab it and go to here and see that probably if I was to do that, there would be a lot of volume accumulation here. If you draw that line, this could be a bullish setup, buying right here and catching this move here, you know, for $3 or whatever this stock was. But you can tell whenever you're going out of the balance and imbalance, for instance, in this scenario here, you have the value area high and low, you see how the price reacts to these levels. If you're to extend this line and extend this line, you see here, once you lose it, you know, you came back quickly for a retest and you draw it back, you gained it back inside. You can just see how well the price will respect these levels as we move along. But fixed volume profile, you will usually want to grab, you know, right before we drop, there's a little bit of accumulation. You want to grab that area and then look at it down to see how it reacts. And I'll show you this guys live as well. The profile types and how to use them. So fixed range, the way we like to use it in this Discord is that you grab right before the explosion, up or down, you grab the area and then you grab the trend. So you will look at the fixed volume profile. Let's say, you know, you're accumulating, you grab that, and then, you know, you grab to the top, the highest high, and then you'll see where your level for accumulation or coming back to is. And it could be, you know, right out that POC of the accumulation. Visible range, and I'll show you guys these live, is whatever you see on your screen is gonna kind of give you a volume profile. And these are good when you have a lot of data, right? If you're on like a daily, weekly, and you could definitely use it on smaller time frames, but usually on smaller time frames, I'm able to use session volume profiles or a combo of fixed range volume profiles to give me the same. So When you use 80% rule, you want to be using session volume preferred. So you always want to compare to the previous day. Session means it's 24 hours of the data that's being in there. And usually when I'm trading ES, I'm on extended hours because I'm grabbing the data from the start. So for today, if I was to trade, I would start at 6 p.m. The futures would open and we would go from there. PVP, this is something that TradingView added recently, so we incorporated it into our trading as well. It's really beneficial when you want to look at it on the, on the monthlies or the weeklies, and we also added that we use it on 7-day balances. If you don't want to use on 7-day balances, that's fine. I do suggest you look at the weeklies at least to see where the value lows are in POCs and see if they've been untouched, which, if they're not touched, that would make them naked POCs in that case. And same can be said for the monthlies. Just use a 4-hour time frame when you're using monthlies. And I like to use indifferent 65 minutes or 1-hour time frame on the weeklies to find the POCs. Okay. And just to reiterate the breakdown of this, so you have the profile high, profile low, you have the value area low, which is just the 68% lowest point of it, value area high, the highest points of the value area, and then you have the POC here. So which is the most volume being traded. Does everybody understand the structure of volume profile now that we've kind of went from outside big view to the inside of the lowest view? Does everybody understand it?
Yes.
Yeah.
Okay. All right, so within the volume profiles, you will have high volume nodes, and you can treat them, right? When you have a high volume node, you can almost treat them as mini POCs. Whenever you have a high volume node, you can use it as a profit taking or as a bounce area, whether you're playing long, if there's a high volume node here and it pops, you can use that as a bounce because there's a lot of participants in that area and they're most likely going to defend that level that's been there. And it's probably the freshest level of the trend. So usually when you have a P-shaped volume profile, right, and we popped up, you usually want to be going long on that high volume node that's right below the POC because the P would indicate the POCs on the top, and you want to play the nodes right below because those are also going to be in the support. Okay. Low volume nodes are basically the opposite. We call them a skinny belly or empty space or no liquidity, or recently we call them FVGs just because there's no volume there. If we usually break those, that's where we are most likely going to accelerate the price up or down, depending on which way the stock is moving. Okay. Any questions on HVNs or LVNs? That's what we call them. High volume nodes, low volume nodes. Okay.
What is the FVG?
FVG, and I'll give you an example, is basically a low volume node. It's where there's no volume in that area. It's called fair value gap, meaning there was a gap in the volume or activity and the price just went through it. And usually when you think about gaps and stuff like that, price likes to come back to those areas, fill the liquidity, fill the void, and then continue down or up, whatever that scenario might be.
Thank you.
Volume profile shapes and meanings. So on this type of trading, and when you guys are learning to trade, it is super important that you guys understand the type of days. And when we started the Discord, I gave you guys this pretty much from day one for you guys to understand it. You have the trend day, which they happen very, very rare, right? So if you're a trend day trader, you might have to wait once or twice a month to trade it because they happen really rarely. Then you have this, the two distributions, right, which would be the B-shaped volume profile. And usually you'll have a B here and a B here, and then between here would be something called skinny belly, and it would not much have here. So here, when you look at this type of trading on a B, and I'm covering a lot of slides now that come after this. If this is our B-shaped volume profile, you need seller initiating aggressive selling here. And then, if the distribution is going to play ping pong here, you would expect aggressive initiative buyers to take it up here to the higher. Typical day, this is what, it's called typical day because typically this is what we get. You get the wide initial balance, and then, if you're going higher, it would be, different type of slope here. maybe they start from the bottom and push it to the higher, or if they set the initial balance high at the top and then they kind of chop in here. It doesn't mean when you have a wide initial balance day that you're going to be playing the range. You might just go kind of sideways, make lower highs, higher lows. When you have a range day, like this one here in the middle, I'm skipping from 3 to 5. It means you go to the top, then you go to the bottom, you get the responsive buyers, and so on. You're playing pure ping pong, not beer pong, in between here, but you're hitting the extremes of the highs and the lows. Even though it looks identical, if you guys compare these two, the difference is when you come here to the bottom, that you have the responsible buyers coming in and defending that level. And usually when I see a wide bounce like this, I become a responsible buyer every time. And if they make a low of the day, I'll just get out. That means that you're most likely going to have this guy here, which is expand the typical day. And, you know, many of you guys are like, well, how do you know the difference between this one and this one here? Well, here, if the balance, if you compare the balances and opens from previous day to this day, if the balance is not as high, there's a high chance that between 2 and 4 p.m. that you're going to make it extended typical day based on the, you know, the how tight you were when you opened versus how wide you opened here. When you're typical, you're not going to break the extremes, the highs or lows. When your initial balance is a little bit smaller than a typical day, there's a higher chance you're going to go into extended typical day here. As you know, in this case, sellers were more aggressive than the buyers here after the breakout from the range. And this can happen to be bullish side as well. And then we cover this one here, sideways day. This is the days that you want to avoid. We kind of chop around. And a lot of people, you know, get stuck between 3 and 6 here. Oops, sorry.
That would be a D shape, right?
Yes, usually, you know, the wide typical days are D shape here. Sideways are D, but they're really compacted. It's called a short compressed D. And this would be literally a lot of volume inside the area, and it would be really perfect perfect bell curve on the D shape, and most of the time you want to avoid number 6. And you know, if you guys think about FMOC last week, Monday, Tuesday, if you go look, this is exactly what you guys had. And a lot of you guys were frustrated because it's like, man, it's not moving. Well, it was waiting for the news. It didn't know what to do, so they just kept it in the indecisive day, and you know, they ate money, basically theta. And that's where you can use different strategies for trading, which I don't trade, iron condors and whatnot. You know, when the price is not moving and staying within range, you can just collect the premium. So there's strategies for all of these type of days, right? Now, you know, kind of, you know, if you look at these days, they're converted into volume profile, and that's what I put here as well. So a D-shaped volume profile, what do you guys think is covering here? What would you guys think a D-shaped volume is?
The typical days?
Yeah, those are your typical days, right? They can start off as number 3 or number 4, because number 4 usually happens towards the end of the day. Okay, and that number 5 can also be a D shape here. It would just be, you know, it would have a little bit of high volume nodes and low volume nodes everywhere, right? You might have like 3, 4 distributions as they're trading it, but you know, it would be a wide balance. So that's D shape here. And how do you trade the D shape, right? So usually you want to trade the tops and the bottoms, where you have responsible buyers coming on the bottom, responsible sellers coming on the top. You want to be playing along with them. So if you guys look at this, if you short the highs and buy the lows with POCB on your exit every time, it should be the 50% of the swing. So if you guys find a D-shaped volume profile and you kind of grab the fibs top to bottom, 50% will be your POC 90% of the time. Because if you think about statistically, they like to play something called discounts, premium and discount. Everything above that 50% would be called premium buying, and below that would be discount. So whenever it goes to the extreme value of the discount value area low, they bring it back to the 50% where it would be higher. Then you need responsive or initiative buyers to go above the POC to take it here, so the responsive buyers sell it. So that's how you trade D-shape. P-shaped, so this, you know, could mean 2 things, right? If you have this that occurs in a downtrend, for instance, you know, we've had this show up many times over a couple of weeks now, is they can indicate a, you know, a kind of like a short cover rally, right? So usually you will see out of nowhere, when we tapped that 3,500 level recently, there was a couple of P-shaped volume profiles and they indicated, a short cover rally is starting. When you see, that you have, let's say, a D-shaped volume profile and it's coming, and then you see, I'm sorry, lowercase b, then you see a couple of D-shaped volume profiles on the bottom, that would indicate that it's being absorbed. And then it might be whether, if you're absorbing here nicely without these crazy spikes, that means you accumulate it and you're buying. So that would be the difference between short cover rally and a really accumulation and going higher. Does that make sense?
No.
Okay, so think about this. If I'm on a chart, I'm just gonna go quickly here. If I'm on a volume profile chart and I have, we're dropping from the top, we're going from here to here, and then from here we go immediately here. This signifies a short cover rally. Here you would have, let's say, a P-shaped volume profile. In order to understand when it's not a short cover rally, you can't have these V-shaped recoveries here. So what the opposite would look like if you're going down, usually you want to see, and I didn't mean to stop that. You want to see a little bit of accumulation here before you go in higher. That would mean that there was buyers here and they're willing to find the value, and then they exploded from this value and they're going higher. This would negate that this is a short cover rally, because that means in here you would have had a lot of D-shaped volume profiles. And then, if you use FVG, fixed volume profile, you can grab this area on the bottom and see from what level did you guys accumulate from. And then most likely, if you miss that rally, hopefully you're not using weekly to chart, trade daily. But let's say, you're a long-term investor and a buyer, and, like I am on AMD. So if you guys look at, for instance, I'm just going to give you an example on AMD. So if you guys look right here, right, AMD, I'm on a 3-day candles. If I go on daily candles here, well, I don't know what this is, guys. If you guys look at, I'm just looking at previous action on this particular stock, and I see that this level here was a breakout level, which I expected it to come to this level, and we came back. So now watch this. I'm going to give you a scenario of this right here. So here, if you guys think about it, initial buying that happened. So if I was to lower this volume profile, because I grabbed a ton. So let's say I grabbed from here to this level right here. Where would you guys expect the POC to be?
Probably around $90, I think. Or
No, on the bottom.
It's gonna be right here, because this is called a bullish setup. This is called a volume accumulation of a bullish setup. So what they did here, they accumulated here heavily. Once they got enough and their warehouses were full, they said, hey, it's time to release all the good news about AMD. Well, if this was the good news here on AMD, and this is the area where they pops from, this becomes a really good area for you to buy AMD as it comes back to this area. And what did we do? We came in $1.40 short of that area before you got a nice little bounce all the way to, 60. I'm sorry, $63. But now you're doing the same thing as you did here. So what I like to buy when I buy shares, I like to look at these accumulation zones like this one here. It took 153 days. Is this over here probably right now? We're just now in 26 days. This one was 153 days. I don't expect AMD to pop, and that's when I buy shares, I'm buying them for a super long hold. But I'm inside buying here, and my average is 62 right now on a lot of shares. If, let's say, they're like, okay, well, we're gonna go lower, and they want to look at this price range here, from here, let's say, to here, well, then I know the next area will be about 28. But am I gonna hold if my average is 68 to all the way to accumulate back to 28? That means I would lose 50% of my money.
Yeah. No.
No, I will not hold this, guys. If they drop this below like $48, 47, I will sell my shares. I will grab the capital that I lost. I will go back and I'll buy with them back at 28. I'm not gonna have that drawdown of this sell-off here. And that's how you grow money. And I gave you guys scenarios before, and it's a little bit off topic, but you know, when you guys look at the, you know, there's something called V. I don't know, and I've covered this in Discord before. Okay, how many of you guys would buy? This is about buying shares, and I want to see who would buy where. Would you guys buy it on the green circle, on the green box right here, or would you buy shares right here?
On the left.
On the green.
Okay, who would buy on the left?
I buy on the left.
I would buy on the left.
Okay.
On the right.
Okay, so for people that buy it on the left, you have a massive drawdown here of, you know, I don't know how much. You would have a drawdown from 70 to 49. What is most likely going to happen to you if you have a 70 all the way to 49?
Okay, you lose money, yeah.
You lose money, but not only that, you guys are going to enter the fear zone. And then what do you
Yeah.
guys do? Most of you
I'll
guys would
sell.
sell and stop,
Sell.
and you would hit the stop loss, guys. Well, if you don't have a stop loss and you trade off of emotions, you would sell because the panic sets in and you guys are most likely to lose. Professional trading and growing your account tells you to buy here. So you want to avoid the drawdowns here. It's okay to miss buying the bottom. It's totally okay. But at least if you buy here and you're big difference that nobody called out, like if you think about it, you're buying shares where?
The bottom.
No, you're buying shares in a downtrend. Here I'm buying shares in the reverse.
Right.
Buying in the bullish trend.
Yeah.
So this is the concept that a lot of traders fail when, you know, you're fighting this V. I want you to think about this mentally as a side note when you're trading options, when whatever you're doing. Are you fighting the V? Are you fighting the trend that you're in? And these trends happen. Here's AMD on 5 minutes. Let me give you a scenario. And if I'm boring you to death, you can say something and I'll switch the
No,
gears.
you're good, man.
So here, if you guys look, this is your initial balance high that was set. First, we identify the type of day you're having. What type of day are we having here?
Range day.
Typical.
Guys, this is
Balance.
just a typical day, balance
Yeah,
day.
Typical.
If this was broken here at 2 o'clock, and you guys see how well these are timed, this happens day over day, week over week. 2 o'clock is when they decide, are we gonna make it extended typical or are we gonna keep it typical? My best reward and risk that I trade in the range days is to buy here. If we break low of the day, you can literally put 30 cents, 20 cents below here and get out. And you will do just fine, I promise. But you have to understand the type of day you're having, because now, if I know what type of day you're having, 50% of your troubles are gone. Then you know where to buy and where to sell. Are you buying with sellers or this? So now I will cover some concepts and I want you to guys to tell me, what am I covering from the PowerPoint? I covered the type of day. Now watch what I'm going to cover now. This is really important you guys understand. I'm grabbing this volume from here to here. Okay. Now watch what I did here. We accumulated from this area. Now watch this. When I come back and I draw this POC here, what do you guys see here?
It's previous day's resistance.
Just focus on this box here. I drew an area where we accumulated from and we created an imbalance.
The POC, yeah.
And you see here, we popped above it. We went to 62.05. But what do you do immediately after that? On the
Support.
first retest, what do you do?
Buy.
Guys, this is your buy zone right here. You came here and look at this. They popped. I mean, this
Yep.
is a good range. 160, 130. They went to 62, 70 cents. And look, so this is called volume accumulation setup. This is the one that I keep telling you guys. This is your money maker. This is your house mortgage payoff. This is your car buyer setup. This can make you rich.
Yeah.
You accumulate these setups, and as soon as you came back on the first retest, you buy it. The rest of this shit you don't care about. These setups repeat, and that's the beauty of it. Now watch this. I'm gonna remove this, and I'll just set the balances again. You missed the first one. You're crying. Well, watch this. There's a balance again being formed. I'm gonna grab this guy, let's say to here. Well, let's see what happens. You popped from this level and look where they came back.
Yeah.
Remember, I'm trading intraday levels, guys. I cannot wait for a setup to be happening perfectly every second. But look at this. You went out of this area. You popped from this value area high. Where did you come back?
POC.
You came back to it and then you ran. If you want a little bit more sure hits throughout the day, then change your aspect, to 10 minutes, right? So if I look at this range here, and I'm giving you guys something live, literally from the class. So if I think about this range, I would say this box right here is my balance right now. This is literally my balance right here, with this being used as the spring on the bottom, right? So if I want to trade this, let's say tomorrow, and I know they accumulated from here to here, well, tomorrow, if this comes back to this area of 61.23, whoever wants to bet with me right now, I'll give you $1,000. We're going to get a bounce here. And that's just how it works, guys. There's no more logic to it. These people that are along here, they will defend the area. So now watch this. What do you guys think? Is this POC, if I shift this to the previous day, is this POC going to shift a lot?
No.
Watch this now. Here, let me kind of give you this. What? It was
No.
61.23. It shifted
Right on the money.
22 cents.
Yeah.
So now this is telling you something. I'm gonna go back to this day here.
So you just use previous data to mark that. Okay, I see.
So now this is telling me aggressively that there's buyers here that are buying at the 61 level, 61.3. I can even look at it now if I go lower. Let's say I'm grabbing, what is this, Friday 28? Sorry, I'm not quick with calculating days in my head. What is this level that they're going off of here? 1, 2, 3, 4, 5, 6 fucking days.
That's a
And
strong support.
they're not letting go of this level, guys. I'm using fixed volume profile to cover this. Now I'm going to show you what I meant by visible range volume profile. Okay,
Yeah.
well, here's visible range volume profile. And what do you see at this peak right here? What is this? What is this called based on what I just showed you here?
High volume node.
It's correct. That's called a high volume node. So now we came back to the high volume node multiple times. We went above it, we popped, and we went higher. Okay, so now we can place our bets here. Ideally, if we don't, this is important, you guys understand. These above are where the sellers are, and this is where liquidity is. If you guys look right here, they're not letting go. Here you have a seller coming in. This is your liquidity sweep. So now if we come back to this level and this demand is not able to break this, does this make this demand strong or weaker compared to the supply? Think carefully.
Strong.
It's weak.
It's weak. Cuban, this is weak. If this
Yeah,
demand
yeah.
that you accumulated here is not able to make new highs, that
Yep.
tells you something really good. And we welcome when they do this. Because now, if you sell off from here, you're not looking to short from here. You let the loser short from here, you're looking to go long from here.
From the low point of control.
Because this
low
point of
profile
control is gonna come here. And look, this level here, now just pay attention here for a second. Watch this now. I'm just gonna take this off because I don't like these vertical lines too much. But watch now. A lot of you guys, I love support and resistance flips. Is this my support? Resistance? Resistance? You see the action that's occurring here? Let me just go on 15 minutes so you guys can see it, or 30 minutes. I'm gonna hide this for a second. Come on, go away. Okay, is it visible now? I'm just
Oh,
gonna.
God,
Yeah.
yeah.
So now
Look how
watch
many
this.
times you hit it.
A hit, 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 hit. Is this level important? Oh, hell yeah, it's important.
Very
This is
important.
a very pivotal moment, and we were able to just look at it and find it within moments of just looking the price action of the volume profile and candles. So now, if they reject this, we don't have to short it here. I mean, you could if you wanted to, but it's a little bit more risk than, waiting to go long. So for me, yeah, sure, man, go to this level. I'll buy you here at 60 and I'll go long on calls. And now when you look at, what I'm going to cover next in the PowerPoint, it's something called structure high and low, right? So here you guys see this, right? So you have structure high, meaning just a channel or a range high. We just call it SSL high and SSL low. And this is just a terminology from the Discord. There's don't confuse it with anything else. There's people that call sell side liquidity, buy side liquidity. They mark it as SSL, they mark it as BSL. So don't confuse it. Don't confuse that. So now what happened in the stock? When you look at it, right, you create a story. We are in channels. We have two channels, right? You have a midpoint and you have the bottom.
Yeah.
So we traded in the bottom. We went to the next channel up, right? We are trading in the next channel up. It's a little shitty, excuse my language, price action, up, down. You have to be really good to catch them. But if we get to the top here, if you short it here, your stop loss can be right here. Does anyone know why?
They'll try to get your stop loss.
They're gonna hit your stop loss immediately, guys.
Yeah.
It's
Yeah,
literally a magnet. And I traded futures on Friday to test this, and I lost like $100. I put
Yeah.
a stop loss literally right above certain levels just to see how quickly the algos come to scoop it. And literally, they came in, and I was okay losing the money. I just want to see how well they do. I would put it, 10, 15 ticks above, and they come and get it, and then they go down. And when I was going long on ES on Friday, I was long here, and I did the same thing. I was like, okay, I'm gonna put a stop loss right, and I'm not kidding, guys. I put a stop loss right below this line, and they stopped me out right here.
Yeah.
You guys see this?
Does sizing matter with their hunts on stop
They don't care.
losses?
They will
Yeah.
scoop every liquidity they can. Because imagine, there's how many retail traders are trading more so now than ever, guys.
Right.
If
Yeah.
there's 1.5 million people that have a stop loss 1 point below, well, now you multiply that, let's say 5-pack on MES.
Whew.
Well, the liquidity they're going to grab here is astronomical. So now, simply, what would you guys do to find the buy level here right now? I'm giving you guys what we should do for Monday.
Go from the top to the bottom.
Punch
Yep.
this now. 37.27 comes tomorrow. This is a great opportunity to buy, but this is
Yep.
intraday level. I'm not looking a lot of data. This is quick. You don't come here at 37.26 and you wait to go run up to 4,000. You get 10 points and you're okay. And how would you find your exit here if I'm long here? Anyone?
Fibs.
Only volume profile. Stay on volume profile. How would
Okay.
you guys find it? Make it easy here. Anyone?
Volume high.
Value area high.
You can use value area high. Don't ignore a little bit of nodes.
Mm.
You have a
Nodes, yeah.
high, the nodes are starting to stick out here. You have a node here, and you have a node, like you guys correctly said, right here. So if you're going long here, you cannot wait for this to run up to 3,800. And a lot of you guys have to stop fucking thinking about the trade that you got out of. I traded on Friday, took a contract from 1.4 to 10 something, 10.2, I believe. It went up to 28. I could have made $28,000 on a 10-pack.
Takes it.
I made $8,000. Do you think I'm upset?
No.
Then why are you guys upset if you make, guys, your account size and percentages matter. And this is the psychology part of the PowerPoint. I didn't get into it, but it pisses me off. Whatever you project in the world with your thoughts, your words, whatever you type is what's going to stick with you. When you take a trade and it runs away from you, you made $200, but it goes to $500. I'm sorry, but why are you mad? You clicked a fucking button, you made $200, and you're sad that you didn't make 500. What does that make you? It makes you a fucking greedy pig.
Greedy. Makes you fucking greedy, man.
Stop being greedy. And I'm helping somebody right now. I'm not going to mention their name. They did exactly what I spent 2 hours explaining to them not to do. Think about this. It's okay about my time. I find time for everyone. I give you 2 hours of my time. I tell you what not to fucking do. And then you come back, you send me your log. If you want my help, I will be on your ass forever. I will not let go. And if you give up, that's okay. You give up and you walk away and you quit the Discord. But do not give up by not listening. If you make $200 and you click 2 buttons and you're in a trade for 5 minutes, the APY on that, you go calculate it. Here, let me give you an idea.
I made $60 in 5 minutes, and I was happy as hell. Turned the whole
Well,
thing off and walked away.
Whoever's happy, here you go, guys. The best money market accounts. You go put $100,000 right here, and this is what you're gonna get, guys. Do you know how much money you're gonna make in a year on this? Does anyone know?
No, but it's a lot of money.
$3,000.
3,000. Yeah.
Guys, you will make fucking $3,000 by giving bank $100,000.
Jesus.
Okay, well, let's be stupid a little bit. Let me just open this.
You're gonna do the compound? Yeah.
Oh, man.
Yeah. Okay, well, I'm just gonna change the name of this file because like I said, I'm working with somebody real quick to fix their trading.
You know, Shorty, you don't know it, but I'm the same way. I've been very greedy after the last 2 years, so it's good to hear this stuff. I continually tell myself, why can't I be more comfortable with 10%? Why am I shooting for, baggers? It's a bad habit.
If
And
I may,
I'll cover that in detail for you, Pants, right now. That hopefully triggers you to change it.
Yeah.
I will give you an example of something that can change it. And it's the
if
same
I
thing
may-
I told this person. I'm not changing names or giving names. This is their account balance now from $7,000, $1,258. Okay.
Hmm.
The plan is we set up rules, and we'll cover this as well in the PowerPoint. And I'm sorry, this is going off topic a little bit, but you guys need it. You have a balance when you start off. You determine your max position, which is 20% here. You trade by the rules. You become a machine. You become an algorithm for yourself. You have the max drawdown, which is, whatever you selected here. In this case, it was 10% of the max position. In this case, the stop loss would be about $26. If you're willing to grow your account at 3%, the only way you don't stop compounding is if your loss of total account is not greater than 3%. Does that make sense?
yeah,
I can't grow an account if I can lose, if I change this drawdown here to anything over 16% here. How do I I'm trading to a 1-to-1.
Yeah.
I cannot grow this account, guys. And all you have to do, I will share this with you guys again. Start with 1,000, guys. You don't need 100,000. If you can't trade 1,000 to 100,000, you can't take 100,000 to 1,000,000. I guarantee you. You're going to lose that 100 as quickly as you lost the 1,000.
Hmm.
You take your 1,000 account, and every day you take a trade. Let's say, we start at 1,000 even, as that's the challenge that I have to reset again. If you take this, and your goal is $30, guys. If you make $30, you're done. You're done. You
Yep.
fucking log off and you're done. And your day one is success. And that's important.
yes, sir.
Your day two is, again, you got to make 31 fucking dollars. You can make $31, but the bigger problem is you logging off once you do. And many of you, you're like, man, I only need $31. I don't want to log off. Let me take another one trade. And then this 31 becomes negative 99. And now, not only did you, hold on. You went back. Your balance is now actually below 1,000.
Yep.
If you stick with the plan, you stick to your rules, you will grow. Is it fucking boring the first year? Yeah. It's super boring. I blew up accounts till I understood this.
Yep.
But
Yeah,
then,
I just
you know
learned
when
that
it
lesson.
changed for me? Once I understood the process and my account was $100,000, the tables flipped. I'm
Yes,
telling you
sir.
guys, tables flipped really quick. Because now, let me see who's not here. Let me find a person in this Discord. Once your account's 100%, $100,000, and you make 3% per day. Hold on.
Yeah.
hold on. What? You make 3,000 per day. What about
Jesus.
this?
Per year.
That's
Guys,
serious.
they are giving you 3% on a year. Take your 3,000. In this case, unfortunately, you have to divide it by 365, the way they calculate that 3%.
Right.
This is how much their money they're giving you per day, guys.
Damn.
Oh, hold on. You guys are not fucking happy with $30 a day?
You can get verified on Twitter for that.
Shorty, if I may say something, you know, a lot of times the mentality of a trader is we start to compare ourselves to other guys that are sitting there banking, you know.
You have to ignore that. That's where
And when you do that and you're not, you know, these guys been trading 10, 12, 15, 20 years. Here I am trading one day thinking that I'm going to be able to do that with $1,000. And I don't have not the knowledge, not the physical part. I mean, the mental part.
you guys all have the knowledge to make these trades, guys. And if you just,
Yeah.
once we go through the volume profile setups, if you're just waiting impatiently and you're not greedy pig, you
Yep.
can make this work.
Yep.
The
I'm a
problem,
greedy
this
pig.
is your problem. And I'll explain every one of your problem and I'm gonna hit you in the heart with it. So way back when you're a baby, when you're a kid, when you're a soccer player, when you're a baseball player, whatever the fuck you played, you were given rules how you're gonna play. You were given strict guidelines. Hey, Cuban, you cannot step out of the bounds here because it's gonna do this. Hey,
Yeah.
Cuban, no. How many of you are parents? Just tell me. I'm a parent.
Me.
That's fine.
Yeah.
I'm up there.
How many times does your kid do something you say immediately? The first word is a verb. No. No, don't touch. No, don't do that. How many times do you guys do that?
I teach
It-
hundreds of kids a week. I'll constantly tell them, no, you can't do that.
Yep. Actually, it's the most worst thing you can do to a kid's brain. Do you guys know that?
Yeah.
If you guys go to any parenting classes, any like really psychologists for raising kids, it's the worst thing you can do. What does that stop in a kid?
The comprehension of understanding why
It's
and
the
what to do
curiosity that
instead.
stops, guys. Curiosity.
Yeah.
And a kid between age of 0 to 5, do you know the first thing they hear whenever you tell them, don't do that? No, don't do that. Do you guys know
Mm.
what's the first word that they comprehend?
Yes.
No, it's no, you have to understand this concept really well to understand. They understand the first verb in the sentence. What's the first verb? No, don't do that.
Hmm.
Is it do?
Right.
Yeah. Yeah. Yeah.
So their
So
brain is
do
gonna
the
say,
opposite.
do that. It's the first verb that they pick up every fucking time. And you know how I know? I tested on my own son for about a year. I was like, let me test this. I read the trading, guys. I read Trading in the Zone. I'm not lying to you guys. I think I read it over 18 times.
Yeah, I
Wow.
believe that.
And not
Is
only did
is
I
that
pick
where
up
we should
something,
start?
yeah, hell yeah. That book is not read it and forget about it. Trust me, I still don't understand the book. I have a notebook full of notes where I'm like, okay, I fucked up on this, and I go back and I change the notes.
Yeah.
And it's not read and forget, guys. And it's not apply once and forget in trading. It's being constantly reminded. And a lot of you guys suffer. And I know this for a fact. I don't care what Twitter says. People that show profits and brag about them, eventually they have big losses and they wipe them out. A lot of traders that I see, they come in, they take one account, 1K account, they draw it to 5K, and you know what happens? They lose the 5K.
Yep.
You know why they lost it? Simply because the concept, the rules that they follow, and I'll
Look, the
go back to
rules.
the slide that I want to cover with you guys. I added this, but maybe a lot of you guys don't understand it when I was showing it. Is simply this right here, guys. This is what's causing you guys all the pain in the world financially on trading. A lot of you guys in trading, you have to have self-defined rules and guidelines to be profitable. If you don't, you will most likely not do what when it comes to risk? You will not
Manage it.
respect it. You will
You
just
know,
let it
respect-
go.
Yeah.
Yeah.
When you accept the risk, hey, I'm gonna lose $200 on this trade if it goes wrong against me, and I'm okay losing those $200. You're here.
As
You
long as you go by your rules, and you
you
don't
accept the rules, and
Yeah.
that's okay. But I want you to pay attention to this. Usually in the process flow, if you guys don't know, triangles are decision points. Is the trade successful when you accept the risk? Does it matter? Who cares? It doesn't fucking matter if the trade is green or red, as long as you accepted this risk here. If it's successful, you will collect your profits because you will most likely have your profit target. If it's not successful, you lost the money that you accepted, and then you move on. Look at this arrow. Move on to where?
The next trade.
You go to the next trade and you repeat the cycle. Trade successful? Yes. Go again. Trade not accepted? You lost it. Go on again. This on the right side is where a lot of people are. You come into a trade. The other day I took Baba trade. I was up 20%. What do you guys think I did on that trade?
Sold.
Sold
I
it.
sold. I kept one contract. I had 10. I kept one. The contract went below 20% of that loss. What do you guys think I did?
Sold.
I
Sold
sold.
it. Yeah. Why not?
I had 9 that were successful. I had 1 that was bad, and I moved on. And then in the Discord, somebody asked me, "Hey, are you still holding Baba?" I'm sorry, but I'm up 20%. Let me go back to here.
Yeah, this is. I need to have this pounded into me, Shorty.
That's
Look
the
at this
question you love. That's the question you love, Shorty. You still in the trade?
I give you. I had. I think the trade was on Baba. Let me read my environment. I grabbed 10 at 62 cents. It was 10 at 0.62. My investment was like 620 bucks. I made 20%, and I think this was, guys, this was fairly quick. I mean, it wasn't even like maybe 30 minutes. I made this in 30 minutes.
Damn.
On 620 bucks, I made $124. Well, let's do the simple math and do what they do in the banks. Hold on, but I'm not supposed to make this much money, 3% of fucking 100. But look what I'm making here. Next time you want to ask me if I'm in a trade, most likely I'm not if I'm up 20%. Most likely I'm not if I'm up 10 to 15%. You guys want me to show you how to grow 1K account balance, but you guys are not willing to accept this. You're not willing to accept this or the 10%. You guys want some returns that are not possible to achieve in an account. You want the percent returns to be much greater than your account balance.
Yeah.
Not gonna happen.
If my account was 1.5 million, how many of you guys would take 15K a day?
Right.
It's a
Shit.
lot of money, but to get to this account, either here's a scenario. You're born into a family that's perfectly wealthy and a lot of traders, and you're taught about risk from early days, and a lot of you guys are not. A lot of you guys are taught just the way average person is, guys. And I was the same way, guys. I came into the United States with $100 and a family of 7.
Well,
We got dropped off by Greyhound bus in the middle of Chicago, the most ghetto area in Chicago. We got dropped off. We were
outside.
mugged. We were looked at like they were gonna fucking kill us. And all we had was $100 on us, collectively as a family. Think about the mindset and the risk my family took to come here to grow. And I'm not, I don't need any, I feel bad. Well, none of that shit. I don't need it. We had a plan as a family. We stuck to the plan. We had the rules. We executed the rules. My parents are retired. They have a really nice house in Europe. I'm doing pretty well. My brother's doing pretty well. Sister's doing pretty well. We had a plan as a family. We all played by the guidelines as a family we defined. My stepdad finished law school, I finished finance. My sister finished banking. We all played by the rules and we had a plan. We wanted to pay off the houses as quickly as possible. No depreciating assets. We wanted to grow for every child that we had. We had to deposit money collectively, invest, and that's it. But we defined the rules the day we landed in the United States. And for a lot of you guys, and you guys are, I'm telling you, a lot of you guys were better off than when I came in. Every one of you was probably better off. I didn't have my first banana till I was 9 years old. They gave me a banana and I said, what the hell do I do with this yellow thing? I'm not lying to you guys.
I
They
came
gave
from
me a
Cuba,
banana.
man, so I know what you're talking about.
They gave me a banana and I just stared at it and I'm like, okay, what is it, a gun? Like, what the fuck do I do with this thing? So you have to experience this. You have to experience not having to appreciate having a little bit.
Yes,
And a lot
sir.
of you guys were fed, nothing wrong with this. This is just life, guys. Some guys get better spoon than the other guys. I got shitty spoon. But it doesn't mean it has to stay a shitty spoon. You have to accept the plan. You have to have a plan. You have to have the guidelines. You trade with it. What do you guys think is the first thing I told this person?
Which person? The one
That I'm helping right now.
not following the rules.
We define the rules. We define her balances, and the first thing he tells me is that she broke the rules. She film out.
Mm.
You broke 6 of the rules that we just defined.
Mm.
There's gonna be days, and I guarantee you this, and I gave you this speech. There's gonna be days where you're like, man, just this one time, I'm gonna break my rule. And if you have more money in your account, that's the day where you're gonna lose that whole account.
Yep.
Yeah, I did that.
And every one of you is gonna do that if you don't accept the risk. So hopefully, initially when you're born, like we talked about, you're given the rules and guidelines, and all you have to do is nod your head and listen to your parents. And if you didn't, you got a butt whooping or whatever that punishment might have been. You got some kind of reaction. When you're trading, you're by yourself. If you don't set the rules, do you want the market to set the rules for you?
Hell no.
Well, a lot of you guys are living off of the market rules, and market rules are fairly simple. You want to hear them?
Yeah.
They don't give a fuck about you. They don't
That's
care about your account or your balance or what you want to buy or what you want to sell.
They want
It's
your
a
money.
net zero sum game. For you to make money, that means somebody else has what? Lost their money. So if you think market's there to get you, no, nobody's there to get you. Everybody's in their own, and we make the market. Those who trade on the side of the market and they respect the market and their stop losses, they succeed. The other 95% of the people that don't, they feed the mammoth, they feed the animal to continue. What's coming in April?
April
2023. What's gonna come?
tax season.
Tax season. What do you guys think retail's gonna do once they start getting $3,500 paychecks from government?
No, putting it all in there, buddy.
Okay, you guys see where I'm going with this. It's a cycle of taking from the poor, feeding the rich.
Yeah.
Yeah.
And a lot of you guys that are struggling, you're not struggling because of technical analysis, I guarantee you.
No, it's emotions.
Yeah, straight. How we feel in our head.
It's how you feel and how you trade off of those levels. For me, till I figure this out and I accepted every single trade, every single risk, till you start accepting, you're not going to be profitable. A lot of you guys, this slide looks very simple, but there's a lot more to it than what you're seeing.
Mm-hmm.
Once your risk is not accepted, it really matters if your trade's successful. I've seen a lot of people. Actually, I had a friend. He worked for my company. He was making $265,000 a year. He
Nice.
started trading Tesla. He was
Dude.
making, I think he made almost $250,000 in a month trading Tesla.
Holy shit.
He gave the 2 weeks notice to me and said, I quit. I'm becoming a full-time trader. I said, you should not do that. He said, you don't know anything about trading. I said, okay, no problem, man. 3 months later, he asked me if I could borrow money for him to pay off the house so he doesn't lose family.
Oh man.
Wow.
You know what he
Yeah.
experienced?
Fuck up.
He experienced a lot of trades that were successful. He experienced winning. And the market's like a casino. You go in a casino 1 night, 2 nights, or 2-3 hours sometimes. You hit, and you're like, man, I'm fucking good at this. So it's like why people say that you lose money.
Overconfidence.
And then you get delusional confidence, and
Yeah.
then you have no fear.
Shit.
Yeah, bro.
Once the thing that comes in and it's called, carefree trading, that's when, I'm not, in this Discord, especially my previous Discord where they had like 5,000 members and I was like a trader for that group. People, and Slabby, if you guys know, he was in that group. On one trade, Slabby with me made $100,000.
Wow.
I personally messaged Slabby. I said, go log off for 4 weeks. Do not trade. Do not do anything. Ask him if I did it. If you guys don't believe me, ask him. I said, do not trade. Just step away. Go buy some stuff. Go buy a piece of land for $40,000 and have it. What do you guys think Slabby did?
He lost it all trading.
Weird.
Yep. So he entered the delusional confidence. He was carefree trading because we took it from like $2,000 to $100,000.
God damn.
He experienced this and it amplified. He was hot, and then he went from 100 to about 50, and he was like, hey, shorty, man, I lost half of it. I said, okay, well, sorry to hear, you're going to lose the other half in the week.
Yeah.
'Cause
Yeah, I didn't know how.
Go ahead.
I didn't know how supportive this group was until a couple weeks ago when I hit 30,000 in that day, and I got like 6 DM messages like log off and come back next week. And that was probably some of the best
And
advice.
what did I tell you, Nella? What did I tell you to do?
Just to turn that shit off and go do something, touch grass. And that was the best thing. You know what I mean? Like, it was cool just to look in the Discord the day after, but I would have blown it probably trying to get back in SPX, trying to turn that 30 into 100.
But
Yeah, I've done that.
We still got it.
I wish I could make 30, boy. I'd never lose it.
So now you think about it. You enter this confidence where you're like, man, I'm winning. But that's not the key. I want you guys to think about this. Read this and think about it. There's only one bullet on this slide, and it's purposely one bullet on this slide. And then when you read it, I'll ask you a question.
Okay.
How many of you experienced this?
Oh yeah.
Me.
I'm sure 100% of us.
I do.
At least once
Guys.
a week.
Exactly. This is the piece that's the account destroyer. You guys stop respecting the risk. Remember, you are a risk manager, not a profit manager.
I like that.
When I did some internships for Goldman Sachs, who do you guys think they paid more, risk managers or portfolio managers?
Risk.
Risk.
The risk managers got paid hell a lot more money. As an intern for the company, I was making $112,000 a year.
Risk managers
And
respect.
all I did is I brought coffee.
What was this during the .com or when was this?
Close there.
Yeah.
I was making $120,000 and I would just bring coffee and I would look at PowerPoint.
Must be nice.
No, it wasn't nice. It's not nice because you see how greedy the top is. They don't care about people, guys. They don't care about you. My job was to help build, as an intern, an algorithm to see if we can buy off 401ks from the sick and dying and give them a cash value so they can sell it to us so they can live their life for a few months before they die. That was my intern project. Well, I quit the second day after I realized what I was building.
Yeah, that's tough.
And it's like, okay, until you see your family members on that list, it doesn't hit you.
Yeah.
Right.
Because you treat them as numbers, right? And then you see your mom and dad, you're like, hold on, my mom's on this list. She had a doctor's visit for this and this, and now she's medium risk, and we're going to offer her 30% cash value of the 401k. And I'm like, whoa. But that's where you have to be real with yourself. You have to understand this piece here. You have to first understand, why are you trading? A lot of you guys that are trading, why are you trading?
Personal attacks, Shorty. Jeez.
I know, I'm brutal, and people either
No, I
like
love
it or
it.
don't.
I love it.
I love it. I appreciate that.
Yeah, this is how I'm gonna continue to structure and learn. I'm in the right place, Shorty. Thank you.
The question you guys don't answer to yourself, and if you want help, if you have significant others and wife, every day, just do this experiment. Go to your wife and say, I made $200 for 10 days every day. And I want you to write down, and let's review it next week, Saturday, from you and a few other people. 10 days, I want you to say, yeah, I made $200 every day. But I want you to be concise. Hey, I had a really good day trading. I made $200 today. I want you to do it for 10 days.
Okay.
A woman's mind is going to calculate that you made $2,000 and that's probably 3 pairs of shoes for them, and they're going to be extremely happy.
Here it comes.
Then on the 11th day, I want you to go to your wife and be like, hey, I was up $2,900 in 1 point, and I lost $2,000 that I invested.
Rocket says his wife will kill him, literally.
I want you guys to do this experiment. Seriously, do it and document it. If you can, and if you're social enough, record it. Just make sure you hide your knives. Because you as a trader, and what we experience, you see, or Cuban said, you see others, and sometimes I post my profits, sometimes I also post my losses for you guys. I don't post it daily. And the reason why I learned this is when I was in the other Discord where I was, and there was a couple of guys that owned that, and they had 5,000 members that they charged $250 a month. They were bringing in close to, like, I don't even know how much money they're bringing monthly, like $200,000 a month. They would get in a trade, it'd be a losing trade. They would buy calls at the top, and then they would average down 45 times, and then they would be profitable on that trade. But how many people in the group can also do that 45 times?
That sort of liquidity is not in my wallet, right?
It's not in your wallet. And then what do? They say, I had 1,000 contracts at 12 cents. No, you didn't. You didn't have 1,000 contracts 12 cents. You had 1,000 contracts. You had 500 contracts at 70 cents. And then you added a lot more to lower it. But they kill, the average, and then they show those profits. And they show profits on 1,000 contracts. The contract went from 11 cents to $1. They're like, man, I just made $100,000. And they post the profits. Okay, so next time that person does a call or a put, whatever that is, a lot more people follow because they saw that his profits were $100,000. And then what do you think happens to those people?
Blown.
Get Harry Waned.
They exactly, they lose all the stuff they can lose, and since they don't have the liquidity that's being brought to them by the people of the Discord or whatever their revenue is, they're out of the game, guys. The only way you stay in this game is if you have the chips on the table.
Yeah.
As soon as you run out of the chips on the table, just ask your wife to borrow you $5,000 on the 11th day after you told her You had 2,000 and you lost 2,900. Ask her to borrow money from her. And you know that when I mentor people, a lot of my mentorship, you know, once you open up with me, is to attack your mental side.
Yeah,
I don't
that's
care
good.
about how you feel.
Yeah.
You know, I have a lot of friends, believe it or not. My wife even says you spend a lot more time in Discord than with your real friends, and that's true. Like yesterday, I went to a football game and I honestly was probably the weird guy behaving weird at the football game because I don't have time for it as much as I
Right.
used to.
Right.
Do I have to have the Discord? I didn't even plan on opening it for new guys. I never planned to open the Discord. I was catching rockets. He can tell you.
I'm
I
so glad you did, man.
never
Yeah.
intended to open it because it takes time, takes effort, and
Yeah.
you know, with 2 kids, especially now a younger one, I was like, fuck it, man. I don't need that headache. But then you see the people, you know, the hearing wings. You see the people showing off their Lambos, but they don't teach you.
Right.
Yeah.
He didn't get that Lambo because he did successful trading. I guarantee you. You look at
Right.
his Discord and he has 15,000 members at $20 a pop. Well, shit,
Yeah.
that's 30K times 12. That's 360. Of course, I can buy a Lambo and bait you in and show you that I can drive a Lambo. I'll go buy a Lambo tomorrow and I'll just sell it again.
Don't. How about
Yeah.
don't? Yeah. People that value risk management don't buy Lambos.
Exactly.
Shorty don't play that. Shorty likes to buy time.
I'll tell you, Shorty, I've been following you on Twitter, and I'm just grateful that you did open up because this is the kind of thing that serious people that take it seriously need, and I'm very grateful you did.
But people don't like this. Majority of the people, they want instant gratification. That's where you guys are stuck.
Nah, fuck that. Yeah, that is where I'm stuck, but I want long-term gratification.
When you build wealth, you don't build it overnight. You build it by
Right.
compounding. And you know, a lot of people don't understand, you know, Shorty and Einstein. You know, my story was I was a contrarian. I was a contrarian trader, meaning I did everything opposite. Like, you know, Michael Burry and all those guys. I would look for imbalances on the other side till I realized I can be short, but I need to compound. I can't be the Michael Burry that nails 2008 and makes millions and billions. I can't be that guy. You know, I'm not given by my family some, you know, fund that I can just kind of go whenever I run out. I have a friend that, you know, who lives in Germany. His dad's the CEO of a Deutsche Bank. He came here for a visit. He bought a BMW X6 for 30 days. And he left the BMW X6 to his girlfriend's mom that he was with for 4 months.
Do you have to pay taxes?
I don't know, but the point is,
kidding.
I don't have the money to,
Right.
and I would never. But there's people that are, you know, they just have an unlimited amount of money. His dad has 200 acres in Patagonia in Argentina. I said I want to go there. He's like, yeah, I'll give you my land. You go there, and there's a couple of cabins. And I'm like, what? Like, who the fuck are you? And then he's like, yeah, I work for Deutsche Bank. I'm the CEO. And I'm like, wow. When the World Cup was in Brazil, one of my friends who's also in the Discord here, he said he wants to go there. He's like, yeah, you can stay in my house in Brazil. There's people that have money. You guys should treat and respect your money, especially if you guys have a W-2, meaning you have a job, full-time job. Don't take this as a gambling to feed your gambling addiction. Take it as a raise. So let me give you a scenario again. If you have a full-time job, let me make your life miserable for a moment. Let's say you make $150,000 a year salary, right? Great. You make good money. That's pretty good money on a W-2 enslavement. Would you guys agree?
Yes.
Yeah.
You take this, you divide it by 52, right? You're doing pretty good. And if you have a wife that makes the same, I mean, you're making quite a bit of money. Well, now let's say a person that's making 115 is like, man, I want to get to 150. How much of a raise do they need?
Yeah, 35.
Okay, if you're in a corporate world, will your corporation come to you and be like, hey, Pants, you did a great job this year. We're going to give you $35,000 raise.
No.
I guarantee you guys, I'm still in the corporate world. I do portfolio management. I have never gave somebody $35,000 raise.
Right.
Well, now think about this. How many trading days in a year?
Some 200 or so.
Let's say you make $30 a day. And you have a full-time job that makes 115. Well, now you're 123.
5%.
Well, now let's say you're like, okay, man, 150 is not a lot. Well, what about now?
Right.
Well, now it's a lot. You just added, you just added $40,000 to your income, right? And especially if you do your taxes right, you know, it can be taxed a little less than this guy here.
Mm-hmm.
But you guys are constantly failing to realize that you're trying to grow net worth, not just a balance, you know, and learn. It doesn't matter if you don't know how to trade. You can make $30 in the market constantly if you have the right rules.
Yeah.
I will try it one day, blindly trade SPY. Just off of the times of the day, I'll make $100 and I'll log off. Somebody tells me the balance high and balance low, I'll make $100 that day, eyes closed.
Yeah.
And that's not to show the cocky. I would log off after the $100. You guys see me trading futures live. I'm up $200. You see my risk. Immediately, my stop loss go into the green.
Yep. Repeatedly, he does that.
And you know, somebody might say, "Hey, Shorty, you make a lot of money, but why are you not risking? You only made 200." Well, my commissions on US futures are about $250 sometimes a day. Okay, if I hit the trade 15 times at $200, that's okay. Or I could stay in for a long ride and you know have a little bit of a heart attacks going up. For me, what I learned in my life. You know, I didn't have a dad. You guys know that. Majority of you guys know I lost him at age 6. The only thing that I remember is this. It's always better to have one bird in your hand than watch 2 birds on the tree branch.
That's a fact.
And that's the only thing I remember off my dad, from my dad, or any of it. And that stuck with me. And then, you know, now you guys get Shorty Einstein compound. I'd rather keep that one bird, guys, for myself.
My parents used to tell me nothing worthwhile in life is you're not going to work for.
Exactly. And a lot of you guys, it doesn't matter if you come from rich. I mean, think about it. Even if you have money, that you don't have money, your goal is to grow it, especially if you have kids and a family. Think about it. If you had a $35,000 account and you're back to a 1,000, you took a lot away from your family. You took a lot away from your kids. Not only did you lose money, you lost something more important. How many of you guys had a day where you lost money and you had really bad attitude with your family?
Yeah.
Exactly. Yeah, man. It happens.
Yes. Yeah. Yes.
But why is it their fault?
Yeah. I don't want that anymore.
Not necessarily your family, just anybody around you.
Exactly. But why is it their fault? Because you fucked up and you didn't have rules.
Yeah.
And you guys remember, I remember this day. I lost $26,000. I was trading live with you guys on the Discord one time, and the complete reversal happened. I said, I'm logging off, and I'm done for the day. I lost a good chunk of money, and I don't typically lose that kind of money during the day. $26,000 a lot.
No.
I logged off, and it took me 4 days to get the money back. My goal was not getting the money back. My goal was to learn from the mistake what I did. What I did, I averaged 3 times on a trade that I shouldn't. Was I influenced? Yes. I was influenced by being trading live and making sure that I can show you I can do it. This is my honest mistake. And I was like, no, never again. Never again will I do that. That feeling that I experienced, I'll never experience it again. I felt humiliated. I hated it, not because I lost the money, but because the reason I lost the money is because I was betting and going against the market.
Yeah.
And market was telling me, don't do it. Don't do
Your,
it. Don't do
your
it.
ego,
Don't do it. And I just
your,
redid it,
e-
redid it.
your ego got in the way.
Exactly. And you know what the stock market did the next day? Exactly what I wanted it to do that day. And that's, I accepted that loss and I learned from it. Your mistakes will eventually become your success story if you let it happen. And a lot of you guys, and I know this went way off topic psychology, but I think it's more important, honestly, than volume profile.
Yep.
A lot of you guys suffer from the mistakes.
Yeah.
If you're trying and it leads you to mistake, man, that's good. Because eventually, if you take those mistakes, they will lead you to the right path. But if you don't, and you do the same shit over and over, use my trick, reset with your own wife. You tell her, like their little experiment, 10 days, and then you tell her you lost it. Or just randomly tell her, man, I was up $400 and I'm up $50. Because a lot of you guys experience that, and see how they react. They're not traders. $400 is a lot. Like, it's a lot of money, guys.
It sure is.
I promise you, if you want to succeed in this, go one day in your neighborhood, if you have like a neighborhood page or like HOA, write down you're willing to do some work for your yard work, for your family, or for friends, for people in your neighborhood. Say it's $50, whatever you want me to do. By the time you come home that day, you will be exhausted. You will hate your life. You'll be asleep by 9 p.m. You will not have desire to do any of it, and you're going to be maybe $100 richer.
Yeah.
To do $400 cash of hard labor, it would take a lot more effort from you.
Yeah.
More knowledge. Remember, if you don't have it in your head, this is what my family always said. If you're not smart enough in your head, you should be strong enough in your muscles. Because what you can't do with your brain, you're gonna have to pull with your muscles. You're gonna have to do some hard labor. So for a lot of you guys, when you're up $150 and you say you can't log off, you first have to forget about losses that you lost. You're not trading to grow your balance back. You have to understand the reason why you're trading. For me, the reason is always the same. I want to have my time.
Yeah.
I want to buy back time.
Yep. Shorty.
Because 30 years from now, I don't know if I'll be alive. I don't know if I'll be alive tomorrow. So the only thing that we can buy is time with your family, time with your friends, with loved ones, right? And a lot of you guys are doing opposite. And then you're like, man, this Discord did not do anything for me because I could not do this, blah, blah, blah. Yeah, of course, yeah. I suck. You're good. You go do better.
That's
But
cool.
you did not change. You're going to go to the next Discord and you're going to do far worse than you did in mine. And that's okay. Trust me, I do not live off of Discord. I can close it down, and I promise I will be just as good.
Don't you dare close this down.
You guys have to find the itch and why. Why are you trading? Why are you living? Why do you do the things? I'll pose a question for you guys, and you just think about it. If the money was no object, what would you do in your life? And correlate that with trading.
If I had all kinds of money, bro, first thing I do is help my family out.
You're not helping them when you don't take the 150 a day, when you don't focus on yourself.
That's right. That's right.
So a lot of you guys, you have fake reasons why you're trading. A lot of you guys are trading addicts that don't know how to stop, and you're just going to keep feeding your addiction. It's almost like you guys need an AA class rather than a
Thank God I already go there.
And I'm serious. A lot of you guys, because especially when you have a job, you're in a dangerous spot because you're like, man, I'll just take 1,000 more and try. But then when you try, you don't change anything. And, you know, the definition of insanity is fairly simple. Is doing the same shit over and over and expecting a different result.
And guys, just to add to what Shorty, and I'm just a baby in this program, man. It takes time. This does not happen overnight. It's not going to do it. I mean, some people learn faster than others. Some get it faster than others, but this takes time.
Today, I love this class compared to the last one where we talk all technical. Psychology part is always the hardest one. Thank you for that.
Psychology trumps the buying. And a lot of times we fail to make money or net worth because of the simple aspect. You know, people ask me like, man, why are you buying AMD at 60s? Well, okay, geniuses, tell me, where should I buy? Where should I buy? Well, you wanted me to buy at 150?
150.
When you're hyped and everybody believed we're going to 300, you want me to buy there? I mean, my odds are much better that I'm going to make money on this right here than right here.
Yep.
So when you're growing and you want to grow your net worth, you buy when everybody's in fear. And I know you hear this statement a lot. You hear it from the people that don't understand the statement and they don't live the statement. I buy AMD here because everybody else fucking scared to buy it. And that's okay. Was I down at one point? Yeah, when it dipped here, of course I added more. And I told you guys my plan from day one on AMD shares. It was 78, it was 60, and then it was in low 50s. If I can buy it, I'll buy it. That was the plan I gave you, and that's what I did. Doesn't mean you have to do it. I'm not an advisor. I just tell you what I do. And exactly is what I do here. And then I look at the 3 months charts, so I see what is it that they're doing. Well, I simply noticed something here, and I'm like, are you guys really struggling for liquidity or something? How come you're selling the stock, but the volume is not there? Like, who are you guys playing? Well, don't worry. You're going to fight. Look, I'm going to fight liquidity with you guys. And remember, if I want to get in aggressively, I'll do a market order. If I want to get it to certain levels where, you want it, then you can get it there as well. But it's going to be fight for liquidity because they're not selling. This is not a sign of them selling. If you guys, reread the Wyckoff theories and this on a long-term hold, what is this right now from Anna Cooling book? Knowledge Seeker, what is this called right here? What is this called from Anna Cooling book?
Accumulation.
This is accumulation. What is this first spike?
Is that distribution?
Yes.
Did you guys read the Anna Cooling book?
No, it's called
Yes.
Is it the low volume test?
The low volume test.
Yeah, test.
The low volume test. All they did here is on a long time. Remember, guys, they take time. They can't buy billions of dollars in a couple of days. I mean, it took them how many days here? Guys, it took them a long time. It took them a lot of time here. If accumulation happened here over 20 years, guys, you really think they're gonna drop this level here?
Yeah.
So, okay, well, you took a very long time, guys. Thank you for accumulating. Where did you buy it? Okay, well, they had it low threes. They bought it here, but that doesn't mean that they also did not buy some here, that there was fresh buyers right here. So for instance, was there a buyer right here? Yeah, there's definitely a buyer here, average 20. Was there buyers right here? Yeah, remember, I'm on 3 candles, guys. There's buyers right here.
So do you think that it's going to drop below that line?
I don't know, but I'll be there to buy it.
Yeah.
I don't
Yeah.
care where it goes. I know what
Yeah.
they're doing, and I'm noticing what they're doing with volume. I'm thinking rationally rather than emotionally on it. Emotionally, everybody's going to say the end of the world's coming. We're going to have pivots, this and that, and we're going to die. Like, it's bad. Well, I'm taking my chances for the long-term hold. I'll buy right here when there's a lot of fear. And that's what they want you to do. They want you to be in fear, and they program your feelings, and it's much easier now than ever. Social media is everywhere. I mean, and I give you guys this concept every time. If I said right now the news media on Twitter released the AMD biggest center is on fire, and the stock drops, and then they say, oh no, it wasn't AMD, it was the building right next to it, did they lie? No, they
Yeah.
just missed. No, they just missed the news. Nobody verified the news.
Oh, okay.
Affirm. You guys know I'm done with the firm because they played me dirty. There was an earnings on the firm, and they leaked the earnings, and they popped the earnings up. I had shares that I was playing. I was expecting good earnings, but since they leaked the earnings, then they dumped it shortly after that. Where was it? It was this right here. I was playing this, and then all of a sudden, they did this to me, and I lost about $18,000 on the shares here because of the manipulation, and you know, I'm done with the stock. But does it mean that, will I buy it back? Yeah, I'll buy it back to $4. If they go to $4, I'll buy it. And that's not my ego. That's not my stubbornness. It's what I believe they're worth now after what they did, and that's based on whether it's the value book, whether it's the people that work there, the crooks or not. But that's how I think about it. I will buy where I see the value, where I see that they're finding balance in the market on the stock. I buy it there long term. I will trade the same way on the option side. You trade the imbalances, balances, you can trade it. There are different setups. And when you guys think about this whole thing that we talked about, volume profile is all leading to, finding your entries on where you want to accumulate or buy, or where you're expecting a level to work for you.
Question for you on that, Shorty. When you're looking at volume profiles over like a decade period, like you are on AMD, are you not worried about the distribution of those accumulations? Or can we see in the volume that distribution didn't occur?
Distributions happen on the top.
Yeah.
Usually, when you put an example like that, which is good, if I tell you right here, this was the first accumulation that they had on this particular stock. It was right here. They had it here. They had a test. They reaccumulated again right here. So these people right here are called early investors. You have people that are here that were basically the inventors of this company, or inventors of whatever the product was that they're selling, which was here. And they bought a lot here, right? They bought a lot. They knew the plans. Then come in the early boys, the Goldman Sachs. They write more stuff here. They buy more shit here. Then comes people before retail. You get the hedge funds. You get people of the friends of the big boys. They're like, yeah, man, buy here. This is gonna be a good company. Then you get, the next pension funds. They're like, yeah, man, we'll buy right here. This is a good opportunity for our pension fund holders. We'll go buy here. We'll be good. Then here you have the retail. They buy right here. And they're like, yeah, man, we're going to do great. This is going to go to the moon. Look at all these runs that it had. Well, then these people that bought right here, they're like, okay, well, we need liquidity to sell a lot. These people are going to hold for a long time. Well, these people here, we're just going to create some fake news, and we're going to create a distribution right here. And that's exactly what they do. They empty the warehouse right here.
Yep.
They empty the warehouse right here. How do we know they did that? Okay, well, it's fairly simple. That's why we do volume profiles and volume a lot. What happened in this concept of volume is that you see a lot of, when I look at distribution, I don't look at one bar. I look at the trend of the bars in the distributions. And I'm seeing a spike in selling. And then, here, what happened on the volume here? Well, you saw a spike in buying. And then what do you see here?
Yeah.
As you're coming,
Volume
this
down
is your,
on selling.
you have, as you're pushing up right here, as you're hitting supply, the volume on buying is going down.
It's going down.
Volume. So right here, I know for a fact, as soon as you break this little box, as you break this, there's 95% chance you're going to go to the bottom of this range right here. They're going to sell it back right here. And boom, they did that. So now I'm looking at this volume here, right? If I look at this range right now, is this a distribution or accumulation? Well, I can't tell just yet, right? So if I look at it on the daily right here, I look at it, well, the volume is constantly there on buying. They're buying, big spike in volume here. Not a lot of volume here. We are approaching the top of this range, and what do you notice? The top of the range is being sold. So there's a high chance that they're going to bring it back one more time to about 54.
Yeah.
That's when I buy.
And as a trader, you can use this as your analysis, but you have to trust it. You have to believe in what you're seeing. So now, if this is the level, and I think it was 64 something, right? 64.01. If I know this level is there and I'm seeing, a big old candle, big old spike in volume at this level, then I can assume that this is the top and this is the supply. If you break this level and you come back here, and then, well, I can see this level then being retested and then potentially going to the next side. And they can do this quietly. They can drag this, the slope of the growth. It can be like this, or they can literally drag this bad boy forever, right? It can take a year to get here. Because a lot of people now are conditioned to see something else in the market, and it's this, right? So you guys had, where's the March 2020? We had this tiny little drop, and people are conditioned to see this now. People haven't seen, the 2008s much. They don't remember them. This can, you think about 2008. Here's your range for 20 years right here. So could this have been the accumulation of this stock and many others?
Yeah.
This could be the, this is the normal stock movement. This is not very normal stock movement here. So we've been in a bull run, for past couple of years.
Yeah, I appreciate the answer to that question. Thank you. I learned a lot there.
So for me, when I think about this, I'm buying here because all these buyers and sellers, they're out here. There's new buyers, new investors that are going to come in and find the value based on what they're doing. And there's other reasons why I'm looking at it, but this is, for me, this is where they're going to show a lot of teeth here.
Yeah, I also bought it when it hit its last low. I was just curious on your thoughts because you've got so much knowledge on this. So.
This is what I'm doing, and that's where I'm kind of waiting for it to happen, right? So, okay, so back to PowerPoint after all of this gibberish on
awesome,
psychology.
bro. Thank you so much for that.
Volume accumulation setup is my favorite setup, guys. This can be really, really, really good for you guys when you're trading. You can use it in 1 minute, 2 minutes, 3 minutes, any minutes, hours, months. As you increase the time frame, the longer it takes to come back to it, right? I have some people here in the Discord that I'm working with. They're like, I don't have time for day trading. Well, I don't think you should use a session volume profile to determine your entries because that's too short of a period. You need to be looking at maybe monthly POCs or even fixed ranges over a really, really large, runs. So if I look at, for instance, SPY, if I was a day trader, I would look at 5 minutes here. If I saw this level, for instance, on SPY, you see that they accumulated here and then they dropped it. Well, it doesn't take a genius to figure that out. If I take this level here and I say, you dropped it from here to here, anytime you come back to this level here on a retest, I will short you easy. I'm here. Guys, I promised you I don't have time to do this, prepare for class and look at the data before. Here, this is where you had accumulation, you know, you popped it up, and then what did you do? You lost that level, and you came back where?
Right to it, the POC.
You came back right to a penny, and you rejected that level right now. So if you miss this level, if SPY ever reaches this level here, it's a fairly easy short.
Yep.
Then it happens again. I mean, you have multiple times, you know, if we decide to go long, here's your accumulation right now. So if you guys think about, you know, the first slide of this is your balance and imbalance. Think about the market like that way too.
And, if we was to go long, wait for the retest on the POC and then go long.
Exactly. So here's your balance and imbalance right now. So if you guys think about it, this balance goes, it's wider balance. Whenever you have a wider balance, that means what? Hmm? You guys have to remember stuff when you're learning.
What would you ask, Shorty?
You're gonna have wider balances of areas and shorter, meaning narrow. What does it mean?
Imbalance, right?
Volume.
Heavy volume being traded. A lot of people.
And people are happier to trade in this range here.
Oh yeah.
As the wider the balance, the more participants are in here, and they're willing to play the game, meaning playing the range.
Playing the
It
range,
will take
yeah.
a lot to kind of break this range. And for instance, here you broke the range, and the rules of ranges is that you're gonna go the distance. You're gonna go the same distance from here to here, which is 133. You're gonna go up same distance, 113. Those are measured moves. So if you go here to 113, okay, you're gonna go here.
Oh wow!
If I
Look
plot
at
that
that.
level, the same level right here, if I plot it, what do you know?
Mm-hmm. Another short opportunity.
This is an opportunity for you to take a stab at a short, which would be structure high. And then, well, I can do this, guys. I can do this right here. I can grab, once we got into this from here to here, I can grab that. Right? Easy. I can do that. And now you see, earlier I was drawing a box. So if I go back.
You said you just did from the top to the bottom there, right?
Yep. So now watch this. This is the latest balance that we had, correct? There's green here. Do you guys agree? Yellow is the latest range.
Yeah.
Well, funny enough, when I take this whole range here, come on, move out of the way. Where's the POC of that range?
Oh wow, right there, right where the buying and selling was, right there.
It's
Where
right
the
at the top.
consolidation was.
So this whole range that we're in balance right now from here. So this is your initial balance that broke right here, which was 381, and the POC right here. So we can build scenarios, but you have to believe in them. So here's the initial balance that broke from the top, right? So if you guys look here, so you're in this range here. Look, boom, 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 boom. A little bit of a spring. You came back here. You created a balance on the top. I would say this is your balance here.
Mm.
I'm looking for at least 2-3 touches. 1, 2, 3. Here you poked above. You got rejected. I don't care about those too much. So now you're back in a range and you're creating a new balance, right? So now you're creating a range, and it looks like in here, you know, you're creating a range. It's kind of like right there.
Yeah, right there, top.
You know, you have multiple tabs, 1, 2, 3, 4. And then you have the bottom. Then you can literally trade this. There you go. Here's your
Multiple
ranges.
touches. Yep.
You know, once you pop over this level right here, and you come back for retest, high chance you go $3. And then I can use volume profile to tell me really what's happening here. Where did you guys accumulate? So where did you pop from? So if you pop from this level on this big range here and you're breaking the value area high, that means you're going to look for new balance.
God damn.
If you're looking for new balance, well, let me look at this balance right here. Your balance starts right here. If you're able to get in here, of course, I would not go long here. I would want it to go above this POC. Once you reclaim that POC, there's a high chance you're going to go 386.
Retest go up.
And guys, I'm just on 5 minutes. So now, if I want to change the way I trade, right? If I'm a scalper, if I go in here and I look at this range right here, so think about it. Let me just hide these candles. What is this telling me right here? I'll hide this for a second.
It's telling you the accumulations right there on the POC.
Okay, let's look at this. Use fixed range, swing high, swing low. If you're looking to go long, wait for the retest of volume accumulation. Short, same thing. Becomes a waiting game. You want to trade in direction of a trend, which will determine if you're long or short. The longer the accumulation, the higher the chance of a trend starting. The longer the I don't want to finish this, but the longer the accumulation showing a trend will be much stronger than the previous one. So obviously, if you're accumulated for a very long time, for instance, let me go on higher time frames. If you accumulated somewhere right here, it looks like you're accumulating on 4 hours right here. It means your trend, I mean, even though it looks like we're, trying to go up, you're still in a very bearish trend. Overall, big picture.
Yeah.
So if this is, the bigger picture of your accumulate, we're trading the tiny little guy here. So I'm on 3 minutes and I'm only trading this little guy right here. On bigger scheme of things that you just saw, I'm just trading for a little bit of profits, guys.
Yeah.
A lot of you guys want to make thousands percentages, but you're looking at 5 minutes. You cannot do that. So think about it. Here's this setup right now. So now if let's say I'm trading tomorrow, and I don't know how the futures will open, but let's say this was the setup I'm trading on SPY tomorrow. Well, this becomes my volume accumulation setup right here. This is the zone. If it drops to here, this is your bounce strategy. You will buy right here, and your first exit is going to be this area right here. You're going to be closing right here. Now you ask yourself, can you make 40% from 371 to 370?
Yes.
Most likely you can make a couple 100%. And that does not mean you have to hold all the way here, right? Because the price action is telling you that you have different scenarios where you can take profits, right? You see sellers right here. So there's some shelf that's starting right here. This can be your first profit.
That's why I take it right there.
You take some here. If you have multiple, then you can even take some in this little area that it has right there, some here, but the big one, it should probably be out all right here. So if you think about it, right, even in this, setup right here, so this person, let's say if you traded this, if you knew, where should you take profits? If you're watching this accumulation, lower highs and flat lows, which a lot of retail sees this, right? If you guys see this and you see it, most don't know how to trade this. I would say 90% of retail has no clue how to trade this or where the targets are. Multiple ways you can find it. The easiest way, if I have this data that's historical from here, and I know from here to here, well, let's look at it. Let's look where potential rejections will happen.
Yeah.
Is that one?
Yep.
Is that
There's
two?
another one.
I'm not trying to be perfect, but here I'm trying to draw them as I can.
There's another one.
Here.
Yep.
And then, well, as you come up to here, this is where the sell-off and imbalance happened at this level. This is your volume accumulation for sell-off. And what do you guys think is going to happen here tomorrow? If you don't believe me, here, take a screenshot.
Rejection.
They're going to go up to the POC and reject.
And now I'll tell you how they manipulate this game so you guys are not frustrated, so you understand it, so you play with them. What happens is, when the futures were invented, it gives them the ability to gap over things that usually they cannot get through during the day. So tomorrow, if they pop this over tonight from 6 p.m. and then they run this to the level that we had, I think it was 382.19 earlier, somewhere here. They run it, which was this accumulation right here. I believe that we were kind of, if you look at it, right? So look here, from here to here, that you sold off. Your POC is going to be somewhere around here on the top. So we have 386 as the next level of rejection. So if you're looking for short, this is where a lot of you guys make mistakes. A lot of you guys, you miss this opportunity and then you wait and itch to take a short at every next pop up. These guys are programmed. These guys are programmed to get to a certain level. It doesn't matter what you do, what they do, they will get to a level. Algos will drive. It doesn't matter who's buying or selling. The algorithms they have much more liquidity than you think, and they will get it to a level where they want to go. This is the level here, if you guys just think about it. Look at the accumulation that happened right here. They accumulated, and then what happened? Poop, a little quick retest, and then, to the node here, they went.
Yeah.
And now you're seeing that this is our zone here, and this is the top of the zone that hasn't been retested. If they gap it up, you can go long here on a retest, but not the best setup because they didn't do it naturally, or it's just algorithm gap up and they go up. Once they get it to this level, this is a good short.
Yes, sir.
Anything in between here, you're playing with fire.
Yep.
If you want to short now. And if you guys look here, if I grab, from here to this guy to see, well, I can do that as well. Look at the level here. You popped over it. You came for a bounce. Respect. I don't know if you guys can see it. I just grabbed this area of accumulation here. So look at this now for a moment. I'm just going to remove this. So I'm going to grab it from here, and I'm going to grab it to this top candle here. And it worked again, guys. Even long, it worked. It works every time. You popped from it, and what did they do? And this was FMOC. Look what they did. Bounced it. They held it. Once it was lost, it tells you that this move was manipulated on upside. Once they lost it, look where they rejected it. They rejected it right off that point right there. So now you have some clear moves that you can play, right? You have this one, a little bit of choppiness here, but you also see that there's a sell-off from here to here. There was a sell-off. And here's a POC. So you have levels. As you arrive at this level, there's a high chance you're going to reject here, right? And then I could also grab this whole thing and say, hey, show me what you got here. And look at that. Here on Thursday, November 3rd, you bounced off of this low here. You accumulated here. From here to here, you accumulated. And this becomes, again, your POC to buy. They respected the value area high multiple times. They ran through this. They got over it. Now, once they hop over this level right here, there's literally no liquidity. High chance they push it to 380. Once they push it over this is literally where you can wait right here. And you just wait. If you're a little bit of a swing trader, not a scalper, you watch this level right here. This level is super important because it accumulated for a little bit before they sold off. And you can even see it here. Like even more, that there's accumulation right here. And look at that shelf that's right here. So you have that level that we talked about earlier, moments ago, that I posted, I believe, right now. You have a level here that accumulated, but look at the accumulation of this level here. It's massive. So that's a volume accumulation setup, and this happens on every time frame, guys. I mean, it happens in every stock. It happens everywhere. Here's, if you look at 2 minutes, let's look at this, for instance, this sell-off right here that happened from here. I'm gonna grab it to this level right here. I'm just gonna move this guy because it's grabbing too much. So now, as this stock comes up to this level right here, I would expect it, and I would have shorted it here. Okay, and if that did not work, you hit your stop loss, and that's okay. That's about the risk acceptance. I'm wrong. It's okay to be wrong. It's your goal is not to be 100% right. It's to be wrong, but small wrong, and to be right a little bit more right. It's okay to be wrong. Now, okay, well, I missed this. Well, let me see this sell-off right here that you had. You had the sell-off here. Well, let me see what's going on. So they came in here, they accumulated, and they sold it off. And this level right here, how would that would have worked out, right? I think that would have worked out pretty well. If you took it from 141, and you could have made money on this here. And then obviously they popped it. I'm on 2 minutes. Keep that in mind. The more data you use, for intraday. So for instance, here you see that this is a pretty bad chart. We're still in the range trading. So next, we're not even making big moves on bigger time frames yet. If you find, let's say Qs, they've been moving a little bit.
Niggas ain't real shooters.
Let's look at Qs, for instance. So here's Qs from this sell-off right here. From this sell-off to here, if you look at it, then you look at the, there's a little bit of data there. That's October, what is that, 4th? Well, this tells you that you have a good opportunity to short once you come back to this level. Is this a good short?
Yes.
This is an excellent short. So you accumulated a lot of setup here. This is where the sellers, this little area is where the sellers are going to defend their short position. And what did they do? They defended the hell out of it. They came back. You came back to that area, right? So you have this to here. Remember, if you're trading something from October 3rd and you're in November, you cannot use day trades to trade that. This is your level where you have to buy a little bit of time, meaning you have to buy at least 4 to 6 weeks. And if you took a short here, let's say it was at 281, and let's say, as it approached here, you entered immediately. You entered on October 25th. Let's say you entered based on this, you can define the levels that you want to trade. Your first, target could be right here. I didn't even see that, but that could be your first target. Your value area low of that could be your second right here. And then, obviously the third, you could go the structure low of this sell-off, which would be somewhere here. Anyways, so now you see the levels you can pick for your options. If you're playing 4 weeks out and you're at 280, 270s would have done great. You would have been close to in the money, and these you would have probably made a couple of 100% on this drop right here from 280 that you got in 281.83. And then people ask, how do you determine the risk to reward? Well, let's say this was my entry here. This is my first target right here. And my stop loss, I would put it slightly above that. Is this a good trade?
Yeah.
Who would take this trade?
I would.
I would.
If there's anyone that would not, you're crazy. This is a 3-to-1 trade, and it's very profitable trade. And you have a, even with your risk being this box here that identified. So if this is your risk, you're looking at your risk being, roughly $3 is your risk, but your profit is from that level all the way to the first target. So from here to here is your target, and your profit is the difference between these levels, right? 281.7, 272, almost $10. It's a very good trade. So you're risking 3 to make 10. A lot of you guys, hate to call you out, you risk 100 to make $20. And that's stupid.
Can you just give some guidelines as to you touch the important point of when you do this like on a bigger time frame? In this case, even though my risk reward everything may be right, but if I take a very short duration, it will burn me out, right? So, is there some guidance you can give how far I need to go when I just on a higher time frame?
Yep. So I'm grabbing a month worth of data.
Okay.
This is almost October 4th to, it's a month worth of data. If I'm grabbing a month worth of data, at least buy a month worth of time.
Okay. Got it.
I didn't hear the last part. A month of data.
So I'm grabbing volume profile right here. That started on October 6th, and the sell-off happened there, and then it took them almost a month, right? If I'm waiting for this data from here to sell off and to bring it back, then I have to buy. So if you look at this distance here, from the time it's sold off to the time it comes back is 21 days. So here, for the 21 days from the time it's sold off to come back to your short entry, okay? If 21 days is how long it took, what makes you think that they're going to dump this in a day or two? You still have to buy the same amount of time, and I usually say plus a week or two. So if it's 21 days plus 2 weeks, that's a month worth of data that you have to buy contracts. If it's a Tuesday, October 25th that it came, then you're looking, just think about it. If this is when it came, then you're looking at November, early December options. You can play the 9th, the 16th, whatever that might be, and you buy time. And a lot of you guys will say, I can't afford it. Well, then you can't afford it. You should not play it on this time frame.
Okay.
These setups happen on all time frames.
Thanks, Shorty.
So if you scalp and you're doing three minutes, 1 minute,
You can use, you look at data, right? So for instance, here, if I'm looking at session breaks, for instance, this is my daily highs, right? Which I pay attention to. If this is my, day high here. So for, let's say for tomorrow, we're looking at Qs. And if this was my low of the day here, well, my bias, personal bias, is that they're going to break this long on the upside. Okay. So if my sentiment is that you're going to, if I go on a daily candles, here's a daily candle right now, I'm grabbing the top. I mean, if we close right there on the top, 1/3 of it, I would say there's a high chance you break the 266. If that's the case, well, then we just have to find the level where they accumulated from, or it might be the retest of the PDH, which is this, and then you play it. So it depends how we open, right? So tomorrow, if I know, they accumulated here, and let's say tomorrow immediately they drop it to this level on Qs, it would be stupid of me not to try to go long at this level at 262.22. Does that make sense?
Yes.
How does market trend play a role in daily trading?
Well, it does play a role, of course. I mean, if, like, let's say this daily candle, so this daily candle here is a little weird, right? It made a higher high. It made also a lower low. So in terms of the trend of 2 days, it's nowhere. It made a higher high and a lower low. I don't know how you define that. It's just it's not a bullish or a bearish trend. So for now, if I look at it, for me, you have to continue making higher lows, but also at the same time, you have to make higher highs. So you have to take out 266.7, and then, to be really bearish, you would have to take out 259.09.
So you get a megaphone forming.
Pretty much,
yeah.
Yeah. So now you're watching to see, right? I mean, if we continue over here, well, then, there's a chance that where you can sell off, because this could be the start of, if you think about bigger scale, like you said, marker trend, Well, obviously the market trend is bearish, lower highs, lower lows, and now you're kind of stuck here for a moment. So if you think about this little box, if you think about the balances, is this a balance? You're trading in the balance right here. You're trading in the range right here. And if you think about like the sell-offs that happened right here, so once you broke this level here, you went to the low, I would say here. So if you're gonna short this guy, like on a bigger time frames, I would wait for this level right here. I would wait for you to revisit this 288, which would mean a lot of retail traders would do what here? How many are gonna go long once this range is broken?
Yeah.
Every single one of them is gonna go, and they're gonna be looking at the law of even numbers. They're gonna be looking at 290s, and I'm pretty certain they're gonna get slapped here. So that's where the power of volume profile, power of understanding how the game, balance and imbalance happen. Could this be the test, right? That they do. They push it from here, and poof, they could definitely do this, right? They set up a lot of traps. Remember, markets will never ever fall if everybody's in the puts. I guarantee you that. It never happened. It will never happen. And that might be the reason why it's slowing down on selling, is because the retail's buying puts like crazy, and they will not reward retail. They'll take your money.
Yeah, thank you.
Is that why the concept of like calls above X number, puts below X number doesn't really work, because institutions kind of see like it's breaking I guess a key level, and most retail are buying at that breakout spot and getting stuffed.
Exactly. Those are just the tests and liquidity. So if you think about the good example, that's exactly why. A lot of people are, remember, afraid to buy calls here. They will rather buy calls above here. So for instance, if I was to grab this zone here to here, this is the level where they accumulated and they sold it off. So a first test of this level here is going to be deadly. And look what happened. You came here and you lost $14 on that tap. And then you came back, broke it, and then you came back under it. And here's that magic where retail loses their balance or loses their account, sorry. This is exactly how it happens, right? They play the breakouts of this level here, whether it's these wicks here. It depends. Some people play the body, some play the candles, whatever that is. If this is the level they're playing, for instance, here on a breakout, much easier to play the retest on this candle than it is the breakout of this one. They really trick you here, and then they dump here, and this level becomes a good short again. And it happens nonstop. And for instance, right now, it looks like a just straight up accumulation here of whether it's going to be acting as distribution, but they're accumulating for whatever reason that is here. So if I was to grab this guy here, yeah, I would expect that at some point on a bigger, large scale here, there'll be a rejection, quick one, and then let's see what they do. So that's volume accumulation setups, and hopefully you guys are able to see it. So every time if you're looking at, let's say SPY, if you're looking at on 2 minutes, you guys, it's simple. It's very simple to do. And sometimes you might not get it, and that's okay if you don't get it. Meaning you don't get the trade to come back to your level, you just wait. There's no reason to be in a rush, like zero. So here, if you're looking at this accumulation on a larger scale here, I mean, you have to wait some time for it to come back 371 if you want to go long. Is there a chance that you can go long on this high volume node? Well, I don't personally trade lowercase B shapes on long on a retest of high volume nodes here, I would rather, go long here. And then if you look at the sell-off, if you guys pay attention to where it sold off from, so if it sold off from here and it went to this guy right here, well, it's quickly approaching the level where you should be shorting, right? So if you guys think about it, this is the area where it sold off from last time. Obviously, we're over this area where it kind of reaccumulated and sold off again. But you see every one of these areas is right here on your volume profile represented as high volume nodes. Wherever it had like a little cluster of volume, it's presented right here. Look. And then here on the push-up, you see they accumulated. And then you see what happened. Because this piece of data, right here, I would say I am not grabbing from here to here. This is not here in this volume profile. So now I'm able to tell where did they buy it from, where did they accumulate, and they did it like pros. Look right here, just look at it. You buy on the bottom, you sell the tops. And what is the retail gonna do? They're gonna go long here. Okay. So, tomorrow, if you're day trading, this is a pretty good setup right here for going down. This right here. And as you guys know, it's not a single level. When you're setting it up, it becomes like a little zone. This comes in, and it's a good setup for shorting. And then you can repeat this on MES, whatever you're trading, whatever your heart's happy with to trade. And here's 2 days worth of data. And if you guys look, I mean, we're still at this high day here, and we're still inside the prior day, Thursday low here. So we haven't really made a lot of movements in the past 2 days. And I like to look at this in terms of like session breaks, because it gives me a little bit of a view that I look at this on 5 days for 1, 2, 3, 4, 5, 6 days. I'm able to see, how's it doing, right? So this was the low of this day here, this Friday, October 28th. And we are kind of still below that and kind of are right here. Support resistance flip here. So you broke it, you went, you retested it. Now, if you want to go above it, I mean, if you go above here, that's pretty good. You have potential range support, new range to go to the top. But I can use volume profile to tell me what's happening. Because if I look at this whole area here, right here, it looked like it contributed to that sell-off. And that POC being right here. So it could be the level that I'm looking on bigger time because I'm grabbing 6, 7 days. If we break all these levels, that's fine, but as you approach this level, I'd be looking, to go short here doesn't mean for a day trade. You can go in and go short, but be quick if you're going to play it for a day. You get a reaction and go, and you're not buying a lot of time. But if you're going for, grabbing 6 days, at least play 1 more week out. And you can short, let's say, SPY here and grab like 380 puts for the next week, and you might be okay on there. Okay. So that's this piece, balance, imbalance. So that kind of goes along with what I just covered, accumulation, imbalances. 80% rule is really deadly. I covered that a lot with you guys, and hopefully you guys understand that it happens a lot, and it's pretty powerful. If you're not familiar with it, I'll go again here on the 80% rule. Let me just find it. Try and find a good one here. Okay, well, this one here is not too bad. So this one here, if you guys look at it, what did we do? So focus on this and this. So I'll just hide this for now. So here's your 80%. We're using this day to trade this. What do? We drop below the value area low, and then you're seeing them pop in. when I say you want to see them pop in, this is not a pop inside the area.
Correct.
You're still dancing on the line. This is not really confirmation that they're aggressive to get it back in the area.
Yep.
What it means is that you go inside, preferably, if you want to trade it the right way, find the 50% on that area, or the value area, and then look to see if we ever came back close to that area. And a lot of times you'll come back to the 50% of the previous day value area and you'll reject it like you did here. Then as you come back close to the value area low, this red line in this case, let's change it to green. As you come close to this line here, you can go long. And you'll have some idea for stop losses too, because you have some candles. Then from here to here is 80% chance that it's going to succeed. In this case, 38.34, 38.70, SPX, that's a lot of money. So there's an 80% chance from here to here that it's going to happen. That's your 80% rule. 80% rule works on a weekly, it works on a daily. You just have to adjust your time that you're buying. So if you play PVP and you go on the weekly here, let's just turn it on quickly. So here's my PVP that I have to adjust a little bit. So if this is my PVP here, right, on my previous week, right here. So this was my previous week here. Where do we reject?
High volume profile.
On the previous
you
week
rejected
value
the
area low.
previous week value area low. Right on that.
Oh, the low value. Oh,
You hit
I
it.
see the last rejection.
And this means, if you guys look at the volume profile, so let's go through these examples here. So these are your rejections depending on where the price action is. If this is our value area and you go above it and you drop inside, this is the rejection when you're above it and you fall back inside. This is your entry here.
Yeah.
Your long entry of the value area, when you hop over it and you come back for a retest, that's your accepting a new area to go long.
That's your long.
When you drop below the value area and you reclaim it, this is your long. Okay. Is there another scenario?
Chop.
Reject and go short.
Reject and go short. I left it here. For example, wouldn't this be one?
Yes.
You dropped below, you came back, you went, and you came back. This is your rejection in short, right? You can go here and go short. And then more aggressive people can also trade this way, right? Where you drop below the POC and you come back and you're here. Okay, I didn't mean to be that big. Right? You drop PDPOC, you come back from the bottom. This is a good short. This is a good short. This one is probabilities wise from here to here, high probability. From here to here, you have to find the next value area where it's going to go to. Okay. So hopefully that makes sense from the PowerPoint standpoint. And then I'll give you some examples here. This is a trade we took. This was Oxy, where we accumulated on a large time frame, and the price was coming back. And I think these went for 300% from here all the way up. And Oxy obviously went 70 something right now. And if you just keep this old value area here, value area high, just here for a moment, you'll see that that's about $68, $70. And if you just go to Oxy, we are at 74 right now. And the massive volume profile was right here. You guys see this? It's still the same volume profile for me. Okay, is this the same one? This is where we bought the calls and we were anticipating to go here first. And we did that, we sold. We went below it, reclaimed, and it's going to the next one, which is value area high here. So hopefully that makes sense here. Bearish example, same thing. Larger time frames take more time to play out. This is SPY. This is, you have the POC. You broke above it. This is massive POC. And you see here, you don't short necessarily here on this break, but on the retest from the bottom, which is exactly what this is the same thing I'm teaching you here. You don't short here on this one. You don't short right here. You shorter on a retest. And that's exactly what, I was explaining right here. So that's bearish example of imbalance. So here's your POC, you drop below it. You don't short there. This is your entry. This is your support and resistance flips, right? And usually when you have a support resistance flip and the POCs, let's say close to that support resistance line, it makes it that much more powerful to short or go long. Or if there's a high volume node, excuse me, in the area, you want to be looking short or long there. 80% rule, kind of graphical explanation, just like I did here. You can use this same concept. You reclaim it here. Here's this one here for shorting previous day. You went above it. You're not able to reclaim it. 80% chance you go to the bottom, and that's exactly what they did. I covered that in more text if you need it, so you guys can read through it. Then you have, when you're in balance and trading in balance, like we're, on the longer periods of times we are right now. So if you guys look at, MES, hide this. So
Shorty,
if you look
the
here, let me finish this. Hold on one second. If you guys look at this, we're still kind of trading in the balance right here.
Yeah.
So if you guys, the best thing you can do also here is, let's say you grab this guy here, and here's this, right? Maybe I grabbed a little bit more on volume profile. I'll probably grab this. And you see what's happening here. So it's your value area high. You're unable to break that. This would be your structure high right here. And then your structure low would be somewhere around here. So that's exactly what this is portraying here. So you have structure high, structure low, and then you have the consolidation POC, because this is multiple days right here. So these levels are fairly important. And you see here, 3802, once you're able to break that, there's a chance that you go to 3850 here, because that's your next high volume node that you're sitting at. And I think we found that level to be true for other levels that we're looking at from ES and SPY. So that's something that you can do here based on trading. And then there's rules you can trade right off of this. If you're going long, let's say breaks go here, your long level is here to the POC, you would go long right here. If you dip and you're more aggressive like this guy here, you dip below, you can come here and you could go long on this structure right here. Right, this would be your spring here. You need the volume to confirm it, the vertical volume to confirm it, and you can go long here, but this being your first, second, third, and then you can use volume or structures to take profits. So that's what this is explaining here, and gives you kind of ideas how to take it. And same thing I just explained, if you miss this entry here, let's say it goes above and it comes back to this retest, well then you have an opportunity to go long here. And one thing that you notice, all of them have plan of an entry and a plan of an exit. I'm planning to enter here, exit here. And then kind of goes on. I gave you guys this test on when we had the homework. This is a lot of times how retail looks at a chart, right? And I kind of give you this level right here for opportunity and how it looks like on the monthly value area here, and how you could have taken that homework. And a lot of you guys did it. A lot of you guys had a little bit of old habits coming in on your entries, and that's why I gave you guys this so you guys can compare it and see where a lot of you guys could take a trade, or if you're back to the retail days where you shouldn't. Volume profile for the settings. A lot of you guys asked me this. I'm not going to answer it. You should be reading through this. I use 168 VPVR. For some reason, I use 200 just to give me a better row visibility. PVP, when using monthly profiles, I use 4 hours. Weekly profiles, I use 1 hour.
That's what I was going to ask you on the VPVR. You can use that as also your indicator, right?
No, of course, yeah. That's just a cumulative view of your chart. Yep.
It's pretty much the opposite of what of the other one of the
So here's
FRVP.
your, yeah, so here's your, I'm looking at this level right here. So if I move this to be like this, what do you guys notice here?
Yeah. Yeah.
Is it the same levels?
Yeah, same levels.
Same exact level, same exact POC. Is just that
Cool.
instead of adjusting because if I do this now, this is going to change because I'm giving it more to look at. I'm giving it more candles.
Yeah.
So now this is going to adjust greatly here. So the trading logic is exactly same for all contexts, right? If you're trading 5 minutes, 10 minutes, 15 minutes, zones, imbalances, they're all the same. If you're intraday trader, you may use profiles of a previous day session, right? So if you're using previous day session, you cannot enter swings on it, guys. That's just 1 day worth of data. It's not making sense to do that. If you're a long-term trader, you want to find interesting to analyze like weekly or monthly or composite, meaning you take, like I took earlier, October 4th to current. I grabbed 30 days worth of data. So you're a little bit longer-term trader, right? And if you're using VWAP on these long-term trades, you want to look at the VWAP that's on the weekly or monthly. And that's what, we also have those indicators. If you trade structures, it might be the best pull fixed profiles, anchor to the working structures and set up scenarios based on their trading zones. That's exactly what I just did here, right? So if you guys think about it, it's exactly what I did here. I've set up, I'm looking at the structures and I pulled up a FVP all the way from left to right. And I'm looking at that particular area to see the volume. The last bullet, a lot of you guys, need to trust that. Whenever you have a current day volume profile being built, meaning the session profile for the day, those don't carry a lot of weight. You can use those levels for rejections, but those levels are not set yet. Unless you're trading, like towards the end of the day and a lot of those volume profiles are set, then that's okay, but it's still not a lot of weight. You want to trade the completed profiles. Here are the rules that I wrote these a while back for you guys. And a lot of them are kind of combining, what everything's covered up in here so far. So you have to read these, understand them. If any of these you don't have understanding of, then you can ask questions, right? By me feeding you every one of these and telling you every day doesn't make sense. And it doesn't make, for you guys, you can come up with your own rules. As long as it's within the parameters of the volume profile, you can come up with your own rules and trade them. I added the fib standard deviations here. So you guys know that I can use regular fibs and I only use 4, which is 50, 61.8, 127, 1618. You can also use the standard deviations of the moves. It's really indifferent how, because usually your buy zone is between 61.8 and 78.6, which is this. And then your targets become these levels here, which is your, depends how you draw it, low to high, high to low. Low to high means, you're going looking for support here where you can get in on an entry to go along. And then on high to low, you're looking for rejection and these will be flipped. Okay. Here you have a little bit of acronyms. So if you guys are not familiar, if you're fairly new, kind of go through them, print them out, get familiar with these. They should be as standard as they can be. Some of these, like these right here, we came up with some of them so you guys can have them. We cover the psychology part first. Go through it, and it's not just going through it once. It's actually believing and accepting these things in your trading, rather than, oh yeah, man, I read it, I'm good. No, you're not good. You have to really understand it and understand what this means. We kind of beat this slide to death. Market Captain, one of my friends on Twitter, he posted something good about FOMO and trading. I just rewired it a little bit to my liking because it's pretty good. Just go through it whenever you feel FOMO. Go through this and see if it makes sense for your psychology. Some references if you guys need it. Dale Trader book, he's really good volume profile trader. This book is really, really good. And Ninja Trader has really good articles on volume profile and how it's set. Okay. For a lot of you, if you're not ready for SPX, that means you're not ready, and that's totally okay. You just don't trade SPX, trade SPY. And SPY, I've shown you a few times, can make the same moves as SPX It's just the dollar value of the move is less, but the percentages might be close to the same. So it doesn't mean you can't make money. It's wrong to think that. But if you guys focus on a few setups and your patience improves, you can make a lot of money trading. And I strongly believe like volume profile is the best weapon out there because it gives you a lot of confirmation on what's going on. And like for me personally, it's the bread and butter of what I do. For me, if I want to go long tomorrow, this will become a really good strong level for buying 37.26. Depending on how we open, I know where they can sell off as well. So all of those things combined, give you the ability to trade and be successful. And hopefully you guys learned something today. And if you didn't, you can ask questions. If you're a different type of trader, I've traded a lot of strategies, guys. I've traded pretty much everything you guys know or trying right now. If you're new, besides EMAs, I do not like EMAs much. Keltner channels, Bollinger Bands, Ichimoku Cloud, whatever you guys think of, I've seen it. So simplify your trading. The less lagging indicators you have, the better you'll do. So I don't necessarily use any lagging indicators in my trading. Okay. Any questions from anyone?
Thank you so much, bro.
Yeah, thank you for the time.
Hopefully you guys got something out of this and you can use it to help you. If anything, find your levels and use your levels with patience. That's the best thing you can do.
Are those slides available at all, Shorty?
Say it again.
Are those slides available at all?
Yeah, they're actually posted under Trading 101.
Okay, thank you.
Shorty, on the last run, I'm sorry, go ahead, Rockets.
No, go, you go.
On the last run on a Friday, I saw 30 cents go from 30 cents to 120 or 200. Yeah, on SPX.
Oh yeah.
It was unbelievable, man. I was like, son of a bitch. And I was thinking about getting in. I said, don't do it. You already made $60. You're good. But
I mean, that's okay. If those things happen, you just have to, look over it. Like I said, it doesn't matter. If you're growing your account, you're not going to become rich off of one trade.
No.
You're going to become rich or wealthy rather than rich when you're, when you're constantly compounding and learning to grow your account. It's about process rather than one trade. Like that one slide that tells you on that PowerPoint, you have to embrace those comments, right? Winning one or two trades is not very important, but getting the winning mindset and knowing how to win constantly is what
exactly
important.
But what I was meaning to say is that you see those contracts that are 0.5, 0.6, 0.7, and sometimes you don't want to take them because you figure, oh man, they're not going to make that much money, and you got your mindset on 200, 300, 400. Shit, those contracts will make you just as much money if it's going the right direction, if it's going your way, your plan.
And some people ask, what do I have against EMAs? EMAs are lagging indicators, and the hedge funds and all these guys know how retail trades EMAs. Nothing wrong with them. I just don't prefer to be target of the hedge funds. I'd rather play with the hedge funds than against them. When you're playing EMAs, they know every one of your moves. They know where the 200 EMA weekly is. They know where the daily is. 4 hours. They know what you're planning on doing at those levels. And since it's a zero-sum game, they will always do opposite of what you're doing.
Yeah, thank you for all the psychology part, man. That's priceless, bro.
There you go. I just posted it there. And you guys will just have to erase some stuff there.
Thank you, Shorty.
All right, guys. Well, hopefully you had a good one. We're about 3 hours in, so we'll see you guys on. Most likely we'll do watch list tonight 9. I'll let you guys know on that.
It was awesome, man. Thank you so much.
Have a good
one.
Shorty,
Thank you, Shorty. Let me know sooner than later, please.
We'll do it.
All right.
Thank you much.
Bye, guys.